us now is Lauren Sauer, Johns Hopkins University Assistant Professor of Emergency Medicine. Thank you, Professor, for joining us. When you look at the CDC and some of the combined testing data that we know, how much more do we understand this virus compared to 2 weeks ago?
We're getting a much better picture based on the testing data that's being, the increased numbers of testing and the testing data that's being shared. The challenge with the CDC combined testing data is it's two different types of tests. So it's an antibody test, which doesn't talk about acute infection, and then it's the viral test, which tells you if you're sick right then. So the sooner we can disaggregate that testing, the better we'll be. But just seeing the testing data flow in is so important to all these phased reopenings.
Are we closer to really finding in these studies a medication, something that works? I know we focused a lot on remdesivir, but how much more knowledgeable are we on that today, as opposed to a month ago?
Yeah, so we are we're seeing a lot of the data come in from these early studies. The remdesivir trial, the ACT trial from the NIH, just pushed their first major paper out, which definitely showed improvements to recovery time and clinical status and mortality, which is great. There's a lot of limitations of that study. It's the first one out of the gate for them, and I'll disclose I'm an investigator of that study. But the study design is really good, and the placebo arm shows that allows us to see a lot more about how the patients are recovering. We also saw some recent data from the hydroxychloroquine, a major hydroxychloroquine registry study, which actually led to the WHO and some other places suspending the use of hydroxychloroquine because of some harms identified and potential safety concerns from those studies. That wasn't a placebo-controlled study. So we have a lot more to learn about hydroxychloroquine as well, but we're seeing good data coming out of really rigorous studies which are improving our understanding of what therapies are going to work and what therapies aren't going to work and may even cause harm.
Lauren, do we have a good handle of how many people have had COVID so far in the U.S. but also worldwide? Do we need to test more just to understand the hotspots, how this thing is moving around?
Yeah, I mean, I think we could always test more. It's always good when you start to see the positivity rate in the testing that you're doing going down, which we are seeing. The WHO would like to see, roughly 5% positive of all the cases, of all the tests that you're being done, or less. Less is always better. But right now we're between. I mean, we're all over the map in so far as that rate. So I think we have a ways to go on testing, but there are a lot of strategic efforts that are happening, which is really great. The more we can test, the better. The more we can use those other public health measures like social isolation social distancing while we're increasing our testing capacity and making sure that the testing's happening in the right spot. So accessing those rural populations, accessing new hotspots, making sure the testing data is separate based on the type of test, all the better.
When do we know how long antibodies are here for in people that develop them and test positive to the antibodies test?
Yeah, it's going to be a ways to go on that. I think we'll have to do longitudinal studies to really understand how people's antibodies develop. Some of the early data that's coming out does show that a lot of people have antibodies, which is good. What we have to understand is if it's those neutralizing antibodies, and the antibody tests are helping, but we're still seeing a lot of false positives and false negatives in those antibodies. In those antibody tests, so the tests have to get better in order to really do those rigorous studies. And I think people are working on that. I think that there's a lot of science behind the idea of understanding who makes neutralizing antibodies and who develops immunity, and what that picture of immunity looks like, how long it lasts. But there's a lot of work left to be done.
All right, thank you so much for joining us. Lauren Sauer there of Johns Hopkins. And be sure to check out VRUS Go on your Bloomberg terminal for the latest information. And of course, tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. The focus is on these tensions between the U.S. and China. Our Kevin Cirilli was talking about some of the things that the U.S. and the Trump administration would be looking for, including sanctions against the Chinese officials. That sent a bit of concern on the markets, but European equities with U.S. equity futures are still up. This is also as the European Union put these final touches on a fiscal stimulus proposal to be funded via EU debt. The common currency, the euro, actually now gaining, and I'm also looking at renminbi because of these heightened tensions, 7.1544. Coming up, it's our simulcast. Jonathan Ferro and Lisa Abramovitz for more Bloomberg surveillance, simulcasted on Bloomberg Radio and television from 7 a.m. in New York and 12 p.m. in London. This is Bloomberg.
Got to show my positions. Knew something was off.
He leads the company that operates 4 of the most popular cable channels for women, producing a wealth of content distributed around the world. After helping to create MSNBC and CNBC, David Zaslav took the helm at Discovery in 2007, where he moved quickly to streamline the company and relaunch channels so he could take it public, all within the span of a year. Since then, Discovery's market cap has quadrupled. And now, Discovery is coming to terms with a new world, one where viewers increasingly turn to streaming services for their programming and are moving away from Discovery's core business of traditional cable channels, leading Zaslav to make the biggest deal of his life, betting once again on content. On this edition of Bloomberg Big Decisions, David Zaslav.
David Zaslav, thank you for joining us. Great to have you.
Great to see you.
So you've just completed the biggest deal of your career, I believe, $12 billion for Scripps. Why did you do it?
Well, it's interesting. There's a financial reason, and there's also a strategic drive that we think could really work for us. Here, we're in the cable and free-to-air business. Scripps is in the cable and free-to-air business. And so we both do the same thing. It's what we do for a living. It's what we know how to do. It's what we do every day when we come to work. And so we feel that we're quite comfortable in putting these two companies together. And the synergy gives us the opportunity to, we think, have a target of doubling our free cash flow. So we generate about $1.4 billion in free cash flow. Scripps generates about $8 billion. And we think we can get to 2, 8, or 3 through revenue synergies by coming up with a lot of cost synergy, mostly cost synergy. And so in a turbulent time, if we can emerge with almost $3 billion of cash, it creates like a moat in a turbulent time. We're different than most media companies in the world, and there are a lot of great companies. But whether it's Disney or whether it's Rupert or Comcast, NBC, CBS, they're mostly in the scripted and movie business. Netflix, Amazon, that whole side of the business is focusing on, as if it was a soccer field, the ball is scripted series and scripted movies. So it's very crowded, it's getting very disrupted, and the number of scripted series have gone from 200 to over 500. And Apple and Amazon and Netflix alone are spending almost $20 billion on top of these companies. So we look at that and we say that we're not that. Well, we're on the other side of the business. The other side of the business is we own all of our content. It's real-life entertainment. We see ourselves as a global IP company, whether it's with Oprah, with Discovery, with Animal Planet, with ID and crime or science or cars. And with Scripps having food and HG and cooking and travel, we put it all together now, and we're on a different area of the field. And so we say very good luck to them. I think there's a lot of great companies. It's going to be very disrupted. And our game is to take those great brands around the world, and as people over the next few years look to pull content onto devices and phones, we think the functional value of food, home, cooking, science, cars, that we'll do better, or we have a chance to do better, than if somebody was going to pay to watch The Crown on a mobile phone. So a lot of it is about owning IP and figuring out a way to get to mobile where people will pull your content.
Well, let's talk about getting to mobile, because that's the big disruption everybody in media is talking about as a practical matter. How will this help you get to scale, as it were?
Well, we're about 20% of the viewership in the U.S. at any given time. And we have 4 of the top 6 or 7 cable channels for women with HG, Food, ID, TLC, and then we have OWN that's #1 for African American women. So I think we have a great menu to offer to an advertiser. Discovery is in 220 countries. We have an average of 10 channels in every country in the world. So we're kind of a factory machine of driving IP all around the world. And so we could do what very few media companies could do. We could do a global offering of food. We could do a global offering of all of our content.
In this new world of streaming, will viewers be watching for platforms like HGTV or Discovery, or will they be looking for programs like The Crown, like Game of Thrones?
Well, it's hard to tell behaviorally exactly what people are going to do. But by doing this deal and generating free cash flow and taking a look at the assets that we have, by owning science globally, by owning every piece of IP that we own effectively, except for sports, we're long IP. We've spent a lot of money to own it on all platforms, and that gives us the opportunity. If Amazon said, I'd like to do an offering globally,
here.
The only other media company that could do that would be Disney, and it would be in the kids space. And so we would raise our hand and say, terrific, we have a great family offering. And so for us, it's about the long tail. And we think in the end, people that love food are going to pull it. We're not sure exactly how it's going to work, but we think the fact that we own all of our content and we have passionate viewers that they love us like they love a sports team. You know, they'll come home and they put on HG all day long, or they'll put on food. And so we have a sustainable growth business with our synergy. And then we have all this IP that we could take direct to consumer, and we've started to do it.
Can you win in streaming without going through the bundlers? I mean, do you have to be on Hulu? Do you have to be on YouTube? Or can you do it directly? Is your product strong enough?
You know, we don't know. Everywhere else in the world, we're on almost every skinny bundle. Here in the U.S., we're in most of them. We're not on Hulu, and we're not on YouTube, but we're on most of the others. And you know, people love our channels. And so, one, we think that over time we'll get on those skinny bundles. We hope to. We'd like to partner with our distributors because they helped us build our business. And in many cases, we are. We're partnering with AT&T on DirecTV Now. We partner with Brian on Comcast on his offerings, with Charter. So that's the best way to do it, kind of regionally. But there is an opportunity for us to go direct to consumer ourselves, which we're already doing in a number of areas, in cars and in sports. But we could also go to those big companies. If you take a look at what NBC, ABC, CBS, and Fox spent 3 years ago, and how much is being spent by Amazon, Netflix, Apple, and Google, you know, there's a massive amount of share shift that's going on there. And these are real global companies, the likes of which we've never seen before. So if any one of those companies wanted to offer for $5.99 a compelling family-friendly service, you know, we would either be most of it, we would argue we'd like to be most of it, or we could be all of it and see how it goes. Because anywhere you go in the world and you say Discovery or Animal Planet or ID or Oprah, people know our brands and they value them.
How will you make that decision about whether you go direct to consumer or you go through middlemen, essentially? How do you make that decision as CEO?
Well, look, right now it's not a fair fight because the direct-to-consumer businesses, the Netflix, the Amazons, we in media used to trade at about a 14 multiple because the view was that this great dual revenue stream cable and free-to-air business would go on forever. And the view now is that it's getting disrupted by some of these direct-to-consumer platforms that are global. There's a question of who's going to emerge and be the winner. We think, looking now, it's only the second or third inning, but we've carved out a very compelling spot of quality brands that people love, that we can offer globally, and we could offer them ourselves.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you?
It's crazy, man. A lot higher than I expected. How much would it be if I sell it now?
talk about disruption in media. There was a time not too long ago when you were the disruptor in chief, in some sense. I watched you from Capital Cities ABC across the street as you created MSNBC and NBC. You created CNBC. How does this compare with that disruption when you disrupted broadcast? Basic cable came in and really disrupted it. How does it compare? What did you learn from that experience you can apply now?
Patience. In that case, Jack Welch and Bob Wright were committed to try and take the broadcast business into cable. For people that were around at that time, it was pretty unusual. And it's important because the business that you think you're going to launch that's going to work is never the business that works. The audience is always going to tell you what they get nourished by. And that's what our business is about. That's what most businesses are about. When we launched with Oprah, the Oprah Winfrey Network, we had a dream,
Yes,
Oprah
I'm
and I,
here,
that it was going to be about living your best life. And we looked strategically at the space and said, we can do this. But when we went out with the content, Super Soul Sunday worked terrific, but a lot of the other stuff was too earnest and the audience went away. And we had to figure out, what are they going to come back for? And it took us a lot of years, but we started to listen, what do you like? That's what our business is about. We don't want everyone to watch, but the Oprah Winfrey Network now is the #1 network for African American women. So for us now, we've broken our company in half, essentially. We got half the company that's about growing our channels, doing what we believe we can do as well or better than anyone in the world. Then there's a whole group that has to figure out, okay, how do I get over the top? What do people want when they consume content over the top, you know? And I think you have to be willing to recognize failure and use it kind of optimistically. Good, we know that now.
And you can do it without the blockbusters.
The way people watch our channels, they don't. It is hit driven if you're a broadcast network. The way people watch our channels, they come home and HG gets me. Discovery is my channel. TLC in Middle America is the channel that I love. I love Oprah. That's the channel that I watch. That's how they curate. Where do I get nourished? That's the business that we're in. We think that's going to be sustainable, and we think that ultimately they could either pull one of those really big, expensive platforms, or when they're looking to pull something that they want that's family friendly, with brands they know, characters they know, everywhere in the world, for a lot less than they would have to pay for that, we look different. And we got to, over time, we'll see if it's an aggregated offering, if it's an individual offering, but I think we got a game. But the first thing we got to do is execute on this.
Can you hear me
stepped
speak?
up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you?
Well, first, we're in every country. So when I say we're in every country, we have a sales team, we have a distribution team, we have creative people, we have marketing people, and we have strategic people. So we kind of know each country. And so when we looked at sports, Eurosport was not being individually fed into every country across Europe. So when we bought Eurosport several years ago, we looked and said, we can use our sales infrastructure. We could use our distribution infrastructure to drive more carriage. We could use our sales and marketing people. And it was a little bit of a leap, but it was driven by the idea that content used to be about getting inside of the television box, that rectangle. And even if you had content that was just okay, second or third choice, you did okay. When we launched our direct-to-consumer sports player 3 years ago in Europe, so we reach across 750 million people in Europe. We have the tennis, we have the cycling, we have the winter sports, we have summer sports, we have the Olympics. So we figured we have a great offering, 750 million people, $8, we should be able to do terrific. And we wrote 10 things that we thought we knew for sure. 8 of them were wrong. And the users told us. They said, okay, you know, we tuned in for the French Open, but we didn't want to watch Tour de France. We love tennis. Or they told us that maybe the most interesting takeaway that we applied to the Olympics is that when people consume content on a device, they expect to hit the device when they get up in the morning and see content. And then they expect a few hours later to hit that device. You need to multiple publish. So if speed skating is starting at 2 o'clock in the afternoon, the people that love speed skating have to get up in the morning and see a 1-minute video or 2 one-minute videos or some information about, and we downloaded 700 pieces of short-form content in 21 languages every day to our Olympic player. And that's one of the reasons why we were able to aggregate about 500,000 subscribers. They love the sports IP, But they really, when people look at content on a device, they expect to be entertained and nourished whenever they hit it. And if you hit it and nothing is new, you're disappointed.
Can you do that and not step up into the really high-priced sports projects? Because that, to some extent, sounds a little bit like ESPN in the United States in the early days. They had lesser sports, and then they had to get into the NFL, they had to get in the NBA, and that, as you know, costs enormous amounts of money. Can you have a strategy that stops short of that?
Well, opportunistically, we have taken football. But we haven't taken football where we get in a bidding war with anyone. If you want to offer your content on a pan-European basis, there's only one place to do it, us. Or if you're a federation, if you're the Speed Skating Federation, you could sell it in every country. And the difference between the U.S. and Europe is in the U.S., it's one culture, one language, and everybody likes the same four sports, essentially. 90% of viewing, 80% of viewing is football, baseball, basketball, hockey. In Europe, there's a lot of sports that are number one in Northern Europe that are number 10 in Southern Europe. And if you're a federation, we're the one stop. And we've been very effective about getting a lot of content. And all the sports content we have with Eurosport, we've, as much as we can, we've gotten it long term, and we own it on all platforms.
You have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. 24/7 news streaming live on Twitter.
have Scripps, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions? Do you need to get bigger scale?
Well, look, as I said earlier, we're in a different place of the soccer field than everyone else. So we think if we could execute on this, own all those passion brands globally. Scripps never took food and HG and cooking and travel around the world. So we have an opportunity to take all that IP, we'll convert it into 48 languages, and we'll start to spread it around. So that'll be a revenue synergy if viewership increases, and we think it will. In Latin America, we've bought some of their content. But I like our hand here. We got some work to do. We got to pay down some debt. We got to prove out that we're going to generate that free cash flow and that we really did build a moat. But at the same time, we're going to be working really hard about learning how consumers consume content on devices. And we're talking to every distributor, because we're better off if somebody that's already in business with you and you're already paying a $100 bill can then have a chance to check a box and pick us. Today in the U.S., there's probably 25 or 30 million subscribers that are broadband only. The one service that's being marketed to them heavily is Netflix. And the industry built us, we built them, and together I think we're going to come up with something that's going to be pretty compelling in terms of a skinny bundle, because it's not sensible to have Netflix have all that field without us on it.
You said you need to pay down some debt, because you do have more debt on your balance sheet than a lot of other media companies do. You said you're going to save $350 million a year on Scripps. How are you going to do that? That's a lot of money, as you and I both know, to save in an operation.
Well, look, as we've looked at putting these businesses together, and it's early days, it's only been 5 weeks, but we've been working on it very hard for 6 months going up to it. We think that's rather conservative. These are 1-over-1 companies. We have 12 channels in the U.S., they have 6. So we're in the same business. We have 220 research people, they have 140 research people. We have 650 salespeople, they have 550 salespeople. And their people are really good. We put some of their people in charge in our new structure. And the idea is, who are the best and the brightest? Because when we looked at it, we said when it comes to nonfiction, who are the best 2 producers of nonfiction content, and who is best at monetizing it? And we looked and we said, in some areas they're better than us, in some areas we're better than them. We put these 2 together, and we will spend $3.5 billion on content, maybe growing to more than that. This is a hard business. We're in the business of creating stories and characters and getting people to turn on their TV and love it.
You've referred a couple of times to John Malone, who's a shareholder, doesn't control your company by any means, but you know him well. What is it like to have John Malone as somebody you can call up and say, should we do this, should we do that? What do you think about what's going on?
Well, I think about my last 30 years in this business, and it's sort of like what you want for your children. You are who you hang out with. And it really helps define you, the narratives that you hear, the questions that you hear. And so I look back over the last 30 years and 15 years listening to why Jack didn't want to do an acquisition that we brought him, or what we need to do with cable, or how we need to do it. Bob Wright, one of the most successful guys running NBC, the Newhouse family, Donald and Cy Newhouse, and Bob Myron, who's a genius and has been in the cable business and built Bright House, and John Malone. And so when I think about where people should be spending their time, yes, you'd like to get the right job. Yes, you'd like to think that you're going to make some money. But I took a 50% pay cut to go to NBC from a law firm, because I thought I can get to hang out with the guys at the Peacock, and maybe someday I'll get to meet Jack. And a lot of the way I see the world, I still talk to Jack all the time. So I'm hearing Jack's voice, I'm hearing Bob Myron and Donald Newhouse's voice, and I'm hearing John's voice. And so for that alone, I'm one of the luckiest guys.
It strikes me that you're now running Discovery, which really appeals in the United States to a lot of the middle of the country. People that the President of the United States probably wouldn't object to. In fact, I understand the President of the United States is a fan of Shark Week. Actually, I read that someplace.
I hope he's a fan of a lot of our stuff. I think, I hope.
You helped create MSNBC. That is a channel in a very different place. What do you think about the media landscape today in the United States in terms of politics? Because it seems to become much more polarized.
Well, I can just say that the business changed. When we launched MSNBC, Brokaw and I and Andy Lack and Tom Rogers, there was a group of us, and Jack said, we're going to launch the best news network in America, and we're going to use the #1 news division in the world to do it. We had this amazing library. We structured a deal with Microsoft to get them in. They wanted the library at the time, and that was our ambition. I'm not going to game out the different news networks in America, but we have to be practical and recognize that at least some of them are following that model, because you on the one hand you want to do the best journalism possible. On the other hand, you want people to watch you, and you want them to watch you for as long as possible. And part of the way we as human beings determine our success is, are we in third place? Are we in second place? How many people are watching us? How many people love us? And so I think that's the journey. And luckily, I'm not going to be one of the guys to figure that out.
Well, but let's talk about how you keep score. That leads us exactly to a great conclusion here. How do you keep score? I mean, I see that now you've jumped up in the rankings, actually, including broadcast and cable. Big step up with Scripps. Is that the way you keep score? Is that how you just tell whether you, David Zaslav, are succeeding?
No, because there's lots of books that have been written about, more scale tips you over. So we're staying in our lane, and what's going to be successful for us, and we've made this decision. On every one of our channels, we've said, if you don't love us, if you're not one of the passionate viewers that loves survival, if you're not one of the people that love science or that love crime, go find some other channels that you love. When we're creating content for our channels, we want global audiences that really affiliate and have a passion for our characters and our message. And a big piece of that is we're not going for the best rating. We're going for the most potent audience that says, they get me. When I go there, I see something that I love. And if we put something on any of these channels that looks like we're going for ratings, they'll immediately say, what's this doing on here? And so they're quite clever, and you just got to continue. This is what we do for a living. Figure them out on TV, and try and figure them out in terms of the devices as to what they're going to love and what they're going to pay for.
David Zaslav, thank you so much for spending time with us today.
Thanks, David. Good to see you.
Coca-Cola, a 130-year-old iconic brand and a dominant force in the $800 billion soft drink industry. Synonymous with globalization, Coca-Cola operates in over 200 countries worldwide. The beverage behemoth now has a new CEO. James Quincey spent the last 2 decades rising through the ranks at Coca-Cola. Now, as head of the company, Quincey aims to win over a new generation that shuns sugar, and to show the world that he takes the environment seriously, even as he adapts to a new world of technology. James Quincy sat down with us for an extended conversation. We wanted to understand how he plans to use innovation to transform every aspect of Coca-Cola, attempting to change its culture while managing a global checkerboard of regulations and tax regimes.
Coca-Cola operates in a lot of different countries, which means there's a lot of different regulatory systems, a lot of different legal schemes you have to really adapt to. Let's talk about a couple of those. First of all, the United States. The tax cuts. How does it affect Coca-Cola?
Yeah, we're still working through the numbers. I mean, our tax rate last year effectively was about 24%, so it's not the biggest change to us. Because we're an international company, the absolute rate hasn't affected us as much as perhaps some of the more domestically focused enterprises. But we're positive on moving the territorial system. So we think the simplification is positive in the long run. To the extent that it helped create more demand, that will be good news too. We're still working through the numbers that we'll lay out on our earnings call. Of course, we're part of having some of the money overseas, but in the end, if it generates more economic growth, that will lift all the boats.
Does the expensing of capital investment affect you at all?
Not in a great amount. I mean, it will make some difference. We'll lay that out, but that's not the biggest moving piece for us.
And if there is significant incremental cash available to Coca-Cola, have you decided yet, does it go into capital investment? Does it go into buybacks of shares? Does it go into dividends?
I mean, we weren't short of cash at the end of the day, so, you know, we've been a successful company. We've got the resources we need to invest in the marketplace. We're still working through exactly how the puts and takes work, because obviously you've got to pay tax on the cash first, or in addition. So we're looking at how we use all that and how we make the right capital allocations.
One of the really big issues for the United States right now is the so-called dreamers. These are the young people who were brought here as children. And the question is, do they get to stay as adults, essentially? Do you have at Coca-Cola people who are really uncertain about whether they can stay or not? There are about 700,000 more or less nationwide.
Yeah, we have some people in our company and in our bottling partners who fall under the Dreamers or the Dakar program. You know, we would love government to find a way to make proper underlying immigration reform, and including finding a solution for the Dreamers so that it's not so disruptive and that they can stay. So hopefully they'll find a path to that. Of course, partial solutions may be necessary, but we would love to see fundamental reform.
You ran Mexico for Coca-Cola at one point, so you have seen this issue on both sides of at least our southern border. Do you see a path forward, a constructive path forward on immigration?
I think there's a path forward, but I think it also is connected, and it can't be completely disassociated when you think about long-term fundamental reform from getting both economies to grow. In the end, part of what drives the informal immigration is the disparity in the economic outlook. So having a community of North America where all the economies are growing actually helps solve that problem too. So I think, you know, leadership from the United States to drive growth will help solve some of these other issues too.
You've also seen NAFTA from both sides of the border. You've seen that issue, which is another hot issue right now in the United States. Has NAFTA overall been good or bad for the United States?
My view would be that free trade deals are good overall for all participants, and I think it's been good for North America and all the countries in it. Doesn't mean it's perfect. Very few free trade deals are perfect. So can it be made better? Yes, I hope they can make it better. But I don't think we should start deconstructing global trade. I think it's been a powerful engine for lifting all boats. It doesn't mean it's solved all problems. There are questions of income inequality. There are questions of not all the rules were perfect and need to be improved. But let's go forward, not backwards.
So when President Trump first came in, he was very closely allied with many people in business. He consulted and he had panels that he talked with as well. Do you get to talk, either President Trump or the administration, about things like NAFTA? I mean, do they consult you, or do you make your views known to them?
When there are things where we have a view or it affects our business, we make our views known either directly to the administration or through many of the business forums, like the Business Roundtable. There are enough points of intersection collectively and individually with the administration that everyone they know what we think.
So from that, do you have any sense of where we're headed with NAFTA? Because there are conflicting reports. I mean, the Canadians seem to be preparing for actually U.S. withdrawal. There are a lot of people in Washington saying, no, we're not going to withdraw. Do you have any sense from your point of view of where we're headed?
My view on negotiations is you've got to let the negotiators negotiate. And if you're not in the room, you don't know what the answer is until it comes out. So I think the important thing for those that aren't in the room is to keep saying what they believe to be true, what they believe to be the areas where things can be made better. And then the negotiators have got to get in the room and thrash it out, and trying to work out what color the smoke is coming from the room doesn't lead you anywhere until they come out and tell you what the answer is.
Your native country has voted in a referendum to leave the EU. And I won't ask you what you think about that, but tell us how that's developing. I mean, is there a soft landing there that you can see? How would we get to it?
It does a bit go back to my point about negotiations. You're never really sure until the cake is cooked. I think the logic of the economics is a softer rather than a harder Brexit. I think in the end, whilst it won't be a catastrophe one way or the other, life will be better. There'll be more economic growth if it's a softer Brexit, but there's a lot of details and a lot of different points of view to work out, because in the end, the referendum wasn't between do you want this or that. It's like, do you want this or not want this? It wasn't a referendum around the version of the exit, which is kind of where we're trapped at the moment. And of course, there's a lot of negotiations going on. It's very important to get it right for the UK and to some extent for Europe as well.
Whether it's Brexit or whether it's NAFTA, how do these trade issues affect Coca-Cola's business?
I think one of the great benefits of the Coca-Cola system is we're global, but we're extremely local. I mean, we manufacture in every country virtually that we sell in. Virtually everything that's sold in the US is made in the US. Virtually everything that's sold in Mexico is made in Mexico. Virtually everything that's sold in the UK or France is made in that individual country. So the global trade restrictions or openings don't tend to affect us heavily in the moment. To the extent that they reduce or increase total economic growth, that's what matters to us. And so I think philosophically, we're pro global free trade because it drives economic growth. Therefore, let's focus on making those deals better because it will provide the wealth to then solve a lot of society's problems.
You came in and took over Coca-Cola and really trumpeted innovation as critical to your future. I believe you have a chief innovation officer, but maybe you're the chief innovation officer in some sense. How do you innovate in a 130-year-old company that's so well known around the world, has been there for so long, has such an entrenched perception in people's views?
It's hard. I mean, any institution that's been around a long time, whether it's a company or a government organization or any organization, it's going to be very hard. So I think from my point of view, if I'm not the chief innovator, I'm certainly the chief agitator for innovation. And what that means is, driving the culture to try and do a few things upon top of everything else we do. Stay curious. If we're not curious about the outside world, about the consumers, about the customer, about what's changing, how will we innovate? But curiosity just leads you to an insight. It's very passive. You need to drive empowerment so people feel they can go and do something, that they're not waiting for head office to make the decision, that they can get up in the morning and go and do something. And I think the next thing is you've got to be inclusive. You've got to try and connect the pieces because we've got a tremendous global knowledge and tremendous global system. Sometimes your idea has already been tried somewhere else. So connect to the other parts of the system. And lastly, we probably fell into the trap of trying to make things perfect before we did anything in the past. No, we need to learn from some of the software companies, have version 1.0, 2.0, 3.0. That gets us both innovation and speed. And if we keep pushing those four things, I think we'll make progress.
And how do you know? How does James Quincey know whether you're getting the innovation job done? And I mean that in the sense you're sitting atop a very large organization, a lot of people spread around the world. How do you judge whether the word's getting down and people are already changing their behavior?
It's hard to know, but the only way forward is to look for multiple signals. No, there's no one number or one metric that's going to give it. Yeah, so we have employee surveys where we ask people. We can look at the sales number and measure the success rate or the number and the success rate of the things we put into the marketplace. We can look at what our research and development pipeline is generating, and are we really getting new patents? Are we really making progress? So I think one has to have a dashboard to look across and say, is there progress?
How is technology changing the way you do business, and for that matter, your workforce?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. Objective reporting that you can trust. Curated comments that provide insight. TikTok by Bloomberg. 24/7 news streaming live on Twitter.
Technology, it's disrupting just about every company that we know of today. How is it affecting Coca-Cola? And first, talk about how it's affecting your relationship with your consumer. How you deliver to your consumer, things like e-commerce, how you market to your consumer.
Yeah, I mean, we kind of look at it in three buckets. How we engage with consumers, you know, there used to be TV advertising, now there's social media. The ways of engaging with the consumer are changing rapidly. Who the customer is and how the shopping actually happens is changing rapidly. And of course, internally, it's changing rapidly. With the consumer, around the world, you know, TV is still the biggest vehicle, maybe less so in some of the developed economies, but around the world, it's still the biggest vehicle. But a lot of it's going into social media. We work closely a lot with a lot of the new tech companies in social media, trying to find ways to, you know, continue to have a brand role. I mean, in the end, someone's got to pay for the content to be developed, whether that's through advertising or sponsorship. So I think there's a lot of change going on. We're adapting. I think we feel we're kind of towards the front end. But what I'm totally clear of is going to be different in 5 years, and it's going to be very different in 10 years. And we're going to have to keep investing in innovation and keep evolving to stay close to the consumers.
As you look around the world, which markets do you see the fastest innovation when it comes to e-commerce? When we just sort of get on your app and you order something up, it gets delivered, for example. Is it China? Is it the United States? Is it Europe?
I actually think that places like Shanghai and some parts of Western Europe are on the cutting edge, along with some of the bits of the U.S., but really at a par. I mean, you know, the U.S. in many respects, there's a lot of advanced e-commerce, but I can tell you it's very advanced in places like Shanghai and Western Europe as well, and the penetration of e-commerce in aggregate is even higher in some of those places than even the U.S. So, you know, when you want to learn what's going on, I would be just as tempted to tell you go to Shanghai as stay in New York.
And how do you market in that circumstance? I mean, we're used to going to a fast food restaurant, for example, and there's a Coca-Cola there. It's on the menu. Yeah. So let's have that Coke or that Diet Coke. Yeah. You don't have that when you're on your app.
No, but you have to get it. I mean, you know, if you went back even 2 or 3 years in China, for example, when a lot of the apps and the mobile payment systems came in, we weren't on the menu. Actually, even worse, we were trying to sell perhaps a returnable glass bottle to the restaurant, which had no way of being in the delivery system. So we've had to re-engineer our business system very quickly to both be present on the app. So what's the virtual representation of what you'd normally see in the store? And how do we change the packaging portfolio so that we can be part of the delivery system? And you have a lot of places in Shanghai where food ordered on apps and delivered is 30–50% of the restaurant sales.
That's the relationship with the consumer. Talk about Coca-Cola as Coca-Cola. How is technology changing the way you do business, and for that matter, your workforce?
It's changing it in lots of profound ways. I mean, in simple terms, you know, you go back 10, 20 years, we were a large company and we're one of the few that could afford to invest in expensive IT systems and do our own stuff, our own programs, our own server farms. You wind forward to today, that's no longer the model. We've had to move to the cloud. We've had to move to standard programs that whole industries use, and we've had to use the mobile. The one thing I always say to the IT department is, just put it on the phone. Everything can be done on the phone. Let's just move everything to mobile on the phone. The old days of IT had training budgets. Why? Everyone knows how to use the apps on the phone. So it's profoundly changing the way that we work, and I think it's going to continue to flow through the organization. We have a big program of digitizing the company.
Does that translate into fewer employees as a practical matter because of the efficiencies from digital?
I think for sure it changes into a different profile. I mean, people are having to adapt to doing things in a different way. We've actually made a lot of changes in our IT departments to move to a different skill set. So it's certainly changing the nature of employment and the sorts of profiles you want. Whether we buy the services ourselves or we buy the services or do it ourselves makes a difference as to where the employees are. But net, more employment's being generated in the economies.
So can Coca-Cola compete with Silicon Valley and the digital startups when you're trying to recruit the young computer scientists?
Well, Atlanta is a very fast-growing economy. The state of Georgia has been ranked, you know, top 1 or 2 place to do business in the U.S. for many years in a row. The local political system has done a great job. So has the city. So it's a very competitive economy there, and we do very well in it. We're happy to see Atlanta and Georgia growing, and they've done a lot to invest in tech startups and the media industry in and near Atlanta, and it's being very successful.
As you look toward really substantial growth in these new beverage categories, are you looking at acquisitions? Are you looking at organic growth? I mean, you have been inclined, I believe, to look for smaller brands, startup brands, bringing them along. Is that the future path to a significant degree for Coca-Cola?
I think it's going to be both. I mean, we have grown organically, but we have made these bolt-on acquisitions, as we call them, the little small ones, the niche brands. I think where we see that something is a really good idea, we invest in them. Sometimes we buy them, sometimes we just invest with them. But there's a quid pro quo. They get the capital that we inject, yet we can introduce them to the globe, not just the country that they've launched in. And that's helped us double the number of billion-dollar brands that we sell around the world. So I think it's going to be an and strategy rather than one or the other.
It's interesting. It's a total beverage company. It's not a food company. I mean, there are some competitors who said, let's become a food company, at least in part. Why did you make that decision? And does it make you any more vulnerable, forgive me for saying, but even to acquisition? I mean, you're what, $200 billion market cap? It's a pretty big acquisition. But there are some pretty big consolidations in the food industry out there.
I think firstly, you know, we're focused on beverages because that's where the greatest synergy and the greatest application of our know-how and our fabulous global bottling distribution system is. It's the thing that can be most synergistic with what we've already got. And the market for beverages is one of the best growing markets in the whole of the supermarket or in the other stores. So it's a great market. We have a good position. We can create a lot of synergy. So it's a question of choices. I sometimes say never say never, which then causes confusion because people say you haven't ruled anything out. I say no, it's a question of what's most logical. And beverages are the most not logical thing for us to do first because we stick to our knitting. In terms of how we think about the consolidation, in the end of the day, I'm pretty convinced that investors, gold star goes to those that grow with expanding margins. Growth is the name of the game. If the category's got no growth, then optimize the margin. Okay, but that's still silver prize largely over the long term. So I'm pretty clear. If we focus on driving top line growth, which we believe we can with our strategy of total beverages, we will attract an investor base that will be very happy with us over the long run.
By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic? World Without Waste, great goal. You have a big new packaging announcement. Why is it important to Coca-Cola, not just as a corporate citizen, but as a business?
You know, it's important to us for a very core part of our values. We've always believed that to have a healthy business, you need to be operating in a healthy community. And one of today's biggest problems is packaging waste. We've done a lot on making things recyclable. We've actually invested a lot of R&D in making progress on reusing it. What we need to do is collect it. So this announcement is about the big missing piece in generating a world without waste, which is collecting back the plastic and creating a market economy for that collected plastic. And I think that's going to do great things to help us grow into the future without creating waste, which is good for us and it's great for communities.
How are you going to attract all that plastic? By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic?
Well, to give you an idea of the dimension, we need to bring back, every person in the world, if they bring back 2 bottles a month, we bring back all our bottles. That's our objective. 2 bottles a month for every person. We collect every bottle we put out. How are we going to do it? Well, there'll be different systems in different countries. You know, every country needs a solution, but it won't be the same everywhere. There are kind of places where it's reasonably advanced in Europe to more informal economies where the collection happens. So there's going to be different solutions everywhere. We're going to have to work with NGOs, other industrial companies and governments to put in place these solutions. But it's absolutely doable. And I think that's what's exciting about setting the objective.
We're very conscious of this in the United States, but what about in other places, like China, for example?
Yeah, look, I think the emerging and the developed countries are where more of the problem is than the US or Europe, which is probably at the leading edge. So we need to do more there. But recognize in a lot of these countries, there is some informal collection system already going on across a wide range of waste. What we need to create is the circular economy. We need to create value for that. So often in the case, and we did this in Mexico, for example, you go back a little more than 10 years, it was less than 10% of the plastic was recycled. Now it's 60%. How? The informal economy was collecting the waste, but there was no market for it. No one wanted to buy it. So we went into the marketplace and bought the plastic, invested in factories to recycle that and reuse it in our bottles. So I think there's a model there for the Chinas and other parts of the world on how to create value out of plastic and get it reused.
You've laid out a bold strategic vision for your company called Total Beverage Company. that includes things beyond Coca-Cola and even beyond Diet Coke. It goes on beyond that to these 5 categories. What's driving that? Is that basically to get away a bit from sugar drinks?
Actually, you know, we're following the consumer. When you look at what's happening around the world, as the world is urbanizing, as people have got more disposable income, they're spending more money on a range of things, including beverages. So what's important within that growing market of beverages is they want more choice. Different people want different things. So if we really want to be able to serve the customer, serve the consumer, we've got to follow them. We've got to get into more categories. Coke is likely to remain the heart and soul of the company. It's the world's biggest fast-moving consumer good brand. But we need more. We need to offer consumers what they want all day long. We have to offer choice. And I think that's what's going to guide us forward. And in a way, it goes back to where we started. If we pay a lot of attention to what the consumer wants, they will take us to where the business needs to grow. And then it ultimately ends up in growth for the business.
I understand that on average around the world, people consume about 8 ounces of a beverage per day. And Coca-Cola, I was told, is about a half an ounce. What is your goal? How much of the market share of total beverage can you really take globally?
I mean, I don't think there's a end of history moment when we reach nirvana. I think what we're looking to do is gain share every year. I mean, it's a competitive marketplace. We have a lot of well-funded competitors doing a lot of exciting things. So we're focused on is can we serve the consumers and gain a little bit of share each year and generate a growing business system that our objective is to create value for everyone who touches that business system, whether it be the economics of the people who are in the value chain like the customer, or even society with initiatives like the packaging one, you know, which I think builds on our heritage of creating shared value in the world. You know, 10 years ago or so, we set ourselves the objective of being water neutral by 2020, and we achieved it a few years early. So we return to the environment all the water we use, which is one of the things that gives us confidence that we can achieve this packaging objective. So we get business growth and doing it in the right way for society.
Okay, thanks very much. We're wrapping up there. This was terrific. Thank you so much. That was really fun.
Thank you.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
I just don't think it's credible to believe that a long-term solution to the problems we're facing can be achieved by moving interest rates.
Economic forecasts are hazardous at best. They're even more so now.
The uncertainty associated with the pandemic is not likely to go away.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Alongside Lisa Abramowitz, I'm Jonathan Ferro with Tom Keene out today. Your equity market rallying 30 points on the S&P 500. Lisa, there aren't many things that write a better story than a market that's ripping over the last couple of days. Price action really shaping the narrative in a big way.
Yeah, but you said it before. Fiscal support, more fiscal support, lower rates. I mean, this is what's driving it. And I just have to wonder at what point fundamentals catch up, because we're not seeing the economic data to justify this. And yet people are looking forward to data they're expecting as we see a reopening start to take hold.
Well, quite clearly, Lisa, what we're going to see in the next few months is just inevitable. It's common sense. An economy that goes from shutdown to reopening, you'll get that month-on-month sequential improvement. Things will look better. July will look better than June. August will look better than July if we can carry on reopening. That's part one. Part two is the limits of the recovery, the limits of normalization, how dependent we are on a vaccine, on improvements on the science side to really adjust the limits of that normalization. And I think at the moment we're focused on the short term, just the sequential improvement. At some point you've got to get your hands around the longer term, how quickly we can normalize.
Well, also, people are talking about a vaccine, and yet I don't hear that much being made of the Merck executives yesterday who came out and said, it has never been done on this timeline before. We cannot commit to this 12 to 18-month time frame, and we did not sign on to President Trump's pledge for a warp speed of this vaccine. You have to make sure it can get out to the entire world in enough bulk to create some sort of herd immunity, and you have to make sure it's safe. So at what point is the reality of the science going to catch up? I mean, there's a lot of hope baked in here, John.
And there's a ton of hope, Lisa, and I think there's nothing like an equity market to put rose-tinted glasses on equity analysts to start seeing the world in a different way, in a better way. Hope about the stimulus, hope about the science. Look, we all share that hope. We all want to live in a better world, and this equity market is just encouraging that hope at the moment, up 30 points on equity futures. Laurie Cavacina of RBC Capital Markets joining us now. Laurie, you've been far more conservative than most as we've rallied and ripped off the lows. You were looking for another drawdown, and all this market has done is shoot higher. What are your thoughts now, Laurie?
So, look, I would say nothing has really changed in our view, John, which is we're not trying to play the day-to-day trades. We're really trying to think about where we're going to end up on December 31st. And to us, there's enough valuation for us back in this market. The rally is very news flow driven. It's very fragile in our opinion. We think you're gonna see choppy waters from now through year end. So, I would say that the tape is tempting to chase, but it's not one that we think we should be chasing right now in terms of getting more bullish.
So let's talk about some of the places where the tape has gained. The Russell 2000 small and mid caps seeing their best performance so far this month versus the S&P in 2 years. I'm wondering whether that has run too far in your view, or whether this is just catch up given how much it's lagged behind.
I think it's the latter, Lisa, and you'll recall that I used to be a focused small cap strategist, and back during the QE era, I was exclusively focused on small caps. So when I hear people talking about how the market's not really matching fundamentals, I say, well, that's exactly what we heard about small cap in the QE era, and they ripped. And what's really interesting to me is that even though this is a Fed liquidity-driven rally that we've seen since late March, the small caps haven't really ripped. And if you just go to your Bloomberg terminal, look at the Russell 2000 against either the NASDAQ or the S&P 500, and just take it back a bit. Don't just look at the past few days. Look at the past few months. It's really been more range-bound than a breakout. And we've had a couple of these little melt-ups like we've had the last few days where it's felt like they're taking off and it peters out. So the price action underneath the surface is actually still telling me that while, the market's in very risk-on mode the last couple of days, it hasn't really been there throughout this rally. The market is still somewhat indecisive if you look at the leadership under the surface.
So if you take a look at the Russell 2000 so far, are you saying that you would consider going into certain areas of these small and mid-sized companies?
Yeah, so we actually, the last big small cap piece we did last month, we said, look, we'd be market weight, sort of the small caps relative to large caps. We'd be neutral. And we thought very much that it would just sort of be dependent upon the trajectory of the economic data, whether or not that trade could be sustained. I think you brought up a great point on normalization. And frankly, as I've talked to investors the last 6 weeks or so, there's a lot of doubts about whether or not we're going to be back to normal anytime soon. That's a limiting factor on small cap performance. That being said, if you think that we have seen the worst of the economic data in 2Q, and as John mentioned, sequentially it starts to get a little bit better than here, you don't want to be underweight either. So we think sort of keeping a balance between your small caps and your large caps makes sense at this point.
Laurie, the problem that a lot of people have got right now is not the fear of missing out, it's the realization of missing out. The NASDAQ has basically filled the gap. The Russell, yes, hasn't filled the gap, but it's still 40% off the March lows. What do you say to those people that have missed out on the rip, Laurie?
Well, look, I think one of the things people are struggling with on the rip is that the rip is really driven by a lot of stuff that people that you and I talk to, John, the institutional community, don't really like to buy. So when we look back at prior recession recovery periods, it's highly shorted names. You talked about the airlines earlier. It's stuff like that, the really, really distressed parts of the market that tend to work in these recovery trades. It's low-quality companies by any measure that you can pick. And I think the frustration I sense from talking to investors, it's not just that the market's ripping and they might not be there. A lot of people I talk to, they did try to get positioned for a recovery, but it's just not the kind of stuff that they want to be in long-term that's doing well right now. And that creates an additional layer of frustration.
You're making the argument to stay overweight consumer staples. Can you tell us why, Laurie?
Well, we're actually neutral consumer staples. We like it better than consumer discretionary, which we're underweight. Our overweights right now, we're overweight utilities, industrials, and healthcare. And generally, I mentioned the concept of balance in small versus large. We also really want to be balanced in terms of our sector exposure right now. So utilities is our favorite defensive, industrials is our favorite cyclical rebound play, and then healthcare is our favorite longer-term growth play. I will tell you that with staples, we actually think the sector looks quite cheap again. If you look at it against next year's earnings, which we think are too high for the broader market, but we think are actually pretty reasonable for consumer staple companies. Consumer staples has also been, just sort of a part of the market that's been so deeply hated. That's usually, when it's as hated as it's been, it's usually a very good 3- and 5-year forward outperformance signal. So we don't think people should be underweight consumer staples at this point. If you're going to play the consumer, we think it's the better way to go than the discretionary stocks.
We're speaking with Laurie Calvasina, head of U.S. equity strategy over at RBC Capital Management, and Capital Markets. And I always love speaking with Laurie, not only because she's really smart, but because she's also experimenting with this homeschool situation, which has led to a questionable productivity, I will just say, of all parents out there. I am wondering, Laurie, John's done a really good job highlighting how people are moving into the cyclical stocks of financials and energy, seeing a real gain recently. I'm wondering how far this rally can go if we don't see the momentum continue in the Amazons and the Netflix. This is a question raised by Julian Emanuel of BTIG. What's your thought?
Well, look, I think it is a limiting factor to some extent. These are the biggest weights in the market, and you do need them to go up if we're going to see the market continue to climb higher. And if they don't, you really have to see a lot of the other big sectors, the big weights in the market, do a lot of the heavy lifting. And because of the disproportionate market cap share of some of those big tech companies, these sort of other areas like financials are just going to have to work even harder. And I'll tell you, I've watched the financials. It's another trade. It's only taken off recently. This has not been in melt-up mode since March 23rd. I really question the outperformance ability of financials on a longer-term basis if rates are going to stay low for a long time. We really do need to see 10-year yields move up for that sector to outperform traditionally. And that's, I'm an equity market strategist. I'm not a bond market person, but I really have some doubts there that this is a longer-term outperformance trade. It feels like a short-term move off the bottom to me.
Laurie, you're an equity market strategist that spends a lot of time thinking about positioning. So talk to us about positioning. And with that in mind, whether the path of least resistance right now for some of these names in financials is higher, just in terms of the positioning. They're so under-owned.
Yeah, what's interesting on positioning, we spend a lot of time looking at the hedge fund positioning because they're some of the most important traders and just sort of dictators of price action in the market today. The financials have been a deep and chronic underweight for hedge funds for a very, very long time. It's like sort of post-financial crisis. We just saw a lot of hedge funds that decided they're not going to play there, and they decided to play in the fintech companies, which are really sitting in IT services as opposed to playing in the banks. And there's a pressure point for hedge funds if we do get a real long, true outperformance trade in financials. They are going to be underexposed. It is going.
Protesters returned to the streets. They were demonstrating against China's plan to take more control of the city with new national security measures. Riot police fired pepper spray projectiles. Around 300 people were arrested. Meanwhile, the richest person in Hong Kong has come out in favor of the Chinese law. Billionaire Li Ka-shing says it's every country's right to address its national security concerns. The European Union's executive arm is coming out with an unprecedented stimulus package to deal with the worst economic emergency since World War II. It calls for spending $823 billion. Two-thirds of that will be in the forms of grants to member countries. The rest will be in loans. The EU would pay for it by borrowing on financial markets. Meanwhile, the US is considering a number of ways to punish China for that crackdown on Hong Kong. The Trump administration is weighing whether to declare that the former colony has lost its autonomy from Beijing. Amongst the possible sanctions, freezing assets of Chinese officials and businesses. There could also be visa restrictions for Chinese Communist Party authorities. And it's a defining moment for Elon Musk and SpaceX. If all goes well, a SpaceX rocket will launch this afternoon from Cape Canaveral carrying 2 NASA astronauts. It will be the first time humans have ever ridden into space aboard a commercial spacecraft. The capsule will dock with the International Space Station 19 hours later. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Can my side be firm?
And my side super soft?
Yes, with the Sleep Number 360 Smart Bed. On sale now. You can both adjust your comfort with your Sleep Number setting.
Come on, Pup, time to go. Can it help me fall asleep faster?
Yes, by gently warming your feet.
But can it help keep me asleep?
Absolutely. It intelligently senses your movements and automatically adjusts to keep you both comfortable.
So you can really promise better sleep?
Not promise, prove. Don't miss the final days of the Memorial Day sale. Save $1,000 on the Sleep Number 360 Special Edition Smart Bed, now only $17.99. Ends Sunday.
Out here, each new day is an opportunity to enjoy what's around you, to take pride in your land, to fire up reasons to be together, to collect new memories, and grow in fresh ways. With all that's changed, you've continued to live life out here to the fullest. So in more than 1,800 communities, we're here with everything you need to bring on the new day. Tractor Supply, everything you need for life out here.
Sick of annoying spam calls? RoboKiller eliminates 99% of unwanted calls. And our answer bots have fun blocking your robocalls.
There's a shark circling my boat. Hang on.
You gotta hit him in the nose. Yes.
I'm almost done. I'm sorry. Just give me 2 seconds. I gotta.
So you can live your life spam call free. Download RoboKiller today.
When a virus attacks a cell, a vital coenzyme called NAD may decline up to 80%. NAD is essential to defend the cell, to repair the cell, and to restore energy. True Niagen, also known as nicotinamide riboside, can increase NAD. It energizes your cells and promotes cellular repair. True Niagen, cellular defense for life.
HelloFresh recipes are so easy. You can get dinner on the table in about 30 minutes.
Yay, I loved it.
Now we're actually able to have some quality time on a weeknight, which is awesome.
Go to HelloFresh.com and use code TV30 for $30 off, including free shipping on your first box.
Directly to the president to get an answer on this, and he said to me that he's displeased with China's efforts and that it's hard to see how Hong Kong can remain a financial hub if China takes over.
Kayleigh McEnany there, the White House press secretary, weighing in on the situation with the United States and China. That situation breaking down, tensions flaring up. It's doing nothing in this equity market. Futures rip higher, 1 hour and around about 13 minutes away from the opening bout. We are positive on S&P 500 futures by 33 points, up by 1.1%. In the bond market, Treasuries just a little bit up.
does President Trump really want to see a China tension story play front and center as he tries to rejuvenate the economy?
Lisa, politically speaking, the president views it as an asset, politically speaking, to be tough on China. And in fact, both former Vice President Joe Biden and President Trump have both said that they would be the more aggressive president in terms of dealing with Xi Jinping. So it's not that one particular party is saying that there should be a different handling of how to deal with China. That is a stark contrast, mind you, to how Russia played out in the 2016 election. Unlike 2016 in Russia, both Democrats and Republicans are in agreement that there has to be a more aggressive policy, geopolitical approach to dealing with China. Biden's campaign is saying that he can handle it, that he would know how to do it because he would be able to rally European allies. The Trump campaign is saying that President Trump has proven to be Xi Jinping's worst nightmare.
Kevin, let's talk about next steps, shall we? We've discussed whether Beijing actually cares about the special trading status of Hong Kong to the degree that it would back away if it was threatened with it. The administration, according to our reports, looking at the Russian route of things, the Russian route of things, sanctions on individuals, on businesses, and maybe not necessarily going forward with rescinding the special trading status of Hong Kong. Any detail there, Kevin?
Yes, and that's really where all of this is headed, is that China could say in the short term that perhaps that would not have significant economic decline for them or a negative impact for them in the short term. However, what we've seen over the last 2 weeks, Jonathan, as we've all talked about before, is this steady incremental approach from U.S. policy from both parties, taking, little steps forward in terms of a more aggressive approach against China. So I think the next step here is not just dealing with China, but investment in other countries. And I think you should look at India as one potential place that in the long term the U.S. is looking at. I spoke with one senior State Department official who pointed in that direction. And I would also just note these types of international standards around different sectors, 5G, as well as the energy sector, in trying to get Europe and the U.S. back more on the same page. That's something that the president has struggled with, or maybe not even struggled, but has not viewed that as necessarily an asset in his first few years in office. But that could start to change over the next couple of years.
Kevin, because naively, previous administrations have focused on one thing, shaping and influencing the behavior of the Chinese Communist Party. And I think you get to a point in time where you've got to recognize time's up, that their ability to actually shape and influence the behavior of the Chinese Communist Party is really limited. Previous administrations failed on that as well. And as we look at this administration, I wonder if we're witnessing a shift now, Kevin, that there's a realization that they can't influence and shape the behavior of the Chinese Communist Party. And we've got to leave that to one side and focus on what we can do here at home. Repatriate supply chains, get allies on board, and create a wider, bigger sphere of influence with the United States at the center of it.
And I would go one step further and to say that this is a realignment of a longer-term foreign policy approach that Democrats and Republicans, and I know I sound like a broken record here, but Democrats and Republicans are in agreement on. To your point, the U.S. policy for the past at least 2 decades has been to engage with the Communist Party of China. Sometimes the best response is no response, and ignoring, and sometimes silence can speak volumes. I would argue that the president has forecasted that in the last 3 weeks because he has not said that he wants to get on the telephone with Xi Jinping at all. This is a president who has engaged frequently with all different types of foreign leaders, from Kim Jong-un to other foreign adversaries. And now he's giving a bit of the U.S. cold shoulder and saying, you know what, if you're not going to play ball, we could find another country to invest in that will.
Kevin Cirelli with the latest down in Washington, D.C. Kevin, thank you, sir. Always great to catch up with you. Lisa, I think it's absolutely critical. Are we making that change? Are we moving away from trying to influence the behavior of the Chinese Communist Party? Are we realizing that it's got to be about creating a wider sphere of influence that includes Europe and includes countries in Asia as well?
Yeah, but I'm struggling to understand the political will right now. Yes, Kevin is saying it's a bipartisan issue, and yet it's unclear how we get there. I mean, we've been talking about it on this program, the idea of how there's a lot of pushback in revoking the special trading status of Hong Kong because it could hurt Hong Kong and the U.S. more. Also, I am really struggling to understand the economic pullback that could result from an increase in these tensions ahead of the election. I don't know that President Trump really wants to see that.
It's a good point. I just wonder, as you go from shutdown to reopen, whether that's really a focus right now. Not much trade going on at the moment. Maybe these politicians, not just in Washington, but also in the UK and elsewhere, feel emboldened to really be aggressive on the trade channel when there's not much trade happening. In this market right now, equities up 33 on the S&P 500. We advanced by 1.12%. A little bit later this morning, we'll be catching up with the New York Fed president on monetary policy in the United States. And next, we'll be catching up with Jordan Rochester of Nomura on this foreign exchange market. From New York City this morning, good morning. We're live on Bloomberg TV and Bloomberg Radio.
Huh. They made this blackberry taste exactly like blackberry hint water.
They made this watermelon taste like hint water, too.
How'd you farmer wizards make all this fruit taste just like hint water?
Well, we triple irrigate our fruit with hint water in the world's largest biosphere, which modifies the DNA to taste exactly like hint water.
Cool. I wonder if their lemons taste just like lemon hint water.
I wonder if their pineapples taste like hint water, too.
National Coalition for Cancer Survivorship, Susan G. Komen, and the Multiple Myeloma Research Foundation. Break away from cancer.
No one
should fight cancer alone.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live On Bloomberg TV and Bloomberg Radio, alongside Lisa Abramowitz, I'm Jonathan Ferro. 60 minutes away from the cash open in New York City. Here's your price action on the S&P 500. We advance a lift. We push higher by more than 1%, up 33 points, just off session highs on a session so far. We advance big time and add yet to yesterday's gains. In the bond market, Treasuries down, yields high by just a couple of basis points to 0.71%. Lisa and I have been talking about the action in foreign exchange through most of this morning. A stronger euro dollar up by 0.25%, some optimism around the euro stimulus story, and a weaker Chinese currency again, Lisa. And we keep coming back to this. I'm calling it the quiet sell-off because it's just not generating much attention, because it's not causing chaos elsewhere. I think if you saw a sell-off off the back of this in broader risk assets, it would get all the attention maybe it warrants. But right now it's so isolated, hardly anyone's talking about it.
Yeah, people are saying that this is going to be pretty contained. I do wonder, though, Hong Kong is a big area for dollar trading, and I'm wondering if any kind of motion on the part of Washington, D.C. could restrict the dollar funding to China. Could that lead to an acceleration of the weakening in the yuan, and what would that do to emerging markets? For now, again, people brushing this off. It's risk on.
Let's have that conversation now with Jordan Rochester of Nomura, our FX strategist. Conversation of the morning. Jordan, let's talk about it, please. We've got this Chinese currency weakness, trying to establish just how much weakness the authorities in Beijing, in China, will tolerate. What's your take on things at the moment?
Well, John, I think it needs to weaken given the stress that the US-China relations are under. We've got that tweet from Donald Trump suggesting that there's going to be something announced by the end of this week. So I think until that moment, we're going to be talking about a weaker yuan. When it comes to the levels, we're talking 720, 730. I think that's not out the rounds of possibilities here. And like you mentioned, interestingly, it is quite isolated. I actually have a chart in front of me right now. You have euro dollar versus dollar CNH. They're usually nearly perfectly correlated over the past two to 3 months. And they really have broken down. You're getting dollar weakness elsewhere in the euro pairs and dollar strength against China.
Jordan, what's your take on why it's remained quite isolated? Why we've seen that isolated weakness and hardly any of it's bled out to the rest of the market?
I think what you kind of commented on, it's been a slow grind rather than a bang. In terms of like the moves I'm looking at, you've got some optimism playing out thanks to what's going on in Europe. So, of course, naturally, euro will be a bit higher thanks to this recovery package. And the China story is a China story. It's not a reason to sell everything if it's done somewhat slowly when it comes to these sanctions. So I think markets are being a bit picky here when it comes to why they're doing such a thing. I'd focus on a few things in Europe, which is you're seeing banking stocks start to show some signs of outperformance for the first time in quite a while. And you are seeing steeper curves too, like 1-3 box spread. That's the European curve versus the US curve. It's actually rising slightly as well over the past couple of sessions. So there are reasons to be buying euro from a short-term perspective, and that's why you've had that breakdown.
Jordan, one reason why perhaps people are buying the euro this morning is because of that 750 euro package that the European Union is proposing. I'm wondering how much of that has already been priced in as a done deal since, as John was pointing out earlier this morning, the Frugal Four have not signed on yet.
I agree completely. I actually feel like a negative Nancy when it comes to this because I'd like to be hopeful. Hope's a powerful thing. And we kind of had that when the market was trading around 108. I think the move from 108 to where we are now is pricing in some of this package. Now, we've all looked at the details given today. We've got a slightly bigger number in terms of the total. So 750 billion overall for this new package. 500 of that will be in grants. That's the good news. However, that was kind of in the realms of what we expected. So you're right. I thought it was a bit priced in, and that's why the move's been barely much of a big move. Euro's been very cruel. It's been in a 108 to 110 range for the past 2 months, and I don't see it breaking that today. What would change is if the Netherlands, Denmark, or Austria, or any of the Frugal Four would say, we want to change our minds on this. The paper they put out yesterday doesn't suggest they're going to do that, though. But when one of them does change their mind and agrees to this package, that might start a chain reaction. Some things to watch out for. First of all, the market is not long euro. It's not short euro. So actually what that means is there's not some massive reason from a positioning angle why you should buy the euro. Another thing to point out is we've got the ECB coming up next week, and they might look to increase the QE package. So yes, you have good news from fiscal this week. It's kind of priced in. We don't go that far in Eurodollar. And then the ECB next week might surprise us with a big stimulus package. We could see more QE, and therefore we see yields suppressed again, and Euro goes back down. So I'm a bit of a negative Nancy, as I said. I think we're still in this 108, 110 range. I am biased from this level to be short. I will change that tune if we break 110.50 or indeed 110.78, John, because that's where you start to see a few CTA trend-following position strategies. That's when they will reduce their short euro position and we get a position unwind.
John, this is really fascinating to me, and I will say that a lot of people yesterday I was speaking with said part of the risk rally that we're seeing is because of the weakness in the dollar, and you have to wonder if the euro starts to weaken and we see more strengthening in the dollar, what that will do to the risk asset balance. It's just been a really hard call, John.
Well, I'm really interested into what the ECB can actually do in terms of doing more. Jordan, what does more actually look like at the ECB? And it comes at a pretty interesting time as they get some pushback from the Constitutional Court in Germany that they turn out the next time around and do even more QE.
I thought it was fantastic. We had that announcement from the German court, and then the ECB didn't slow things down. They picked things up, as you just said. The QE that they're doing has been not as impressive as other central banks, though, John. And I think that's what they need to do. I want the ECB to be less like their past former self and more like what the Fed did.
What's up,
or
Yama?
the Bank of England's doing.
Come on, everybody.
So just to give you some numbers, every week the ECB is purchasing around 0.3.5% of GDP. And that sounds like a good number, but the Bank of England is doing pretty much double that. And the Fed at one stage was doing at least 15 times that. So we need to see the ECB increase the PEP package. If they did something like 500 billion, that would be towards the top end of estimates. If they went even further, that would be even more fantastic for spreads. And that would mean we'd see risk on in terms of equity markets. You'd see peripheral debt spreads narrow. It actually would mean the euro goes lower, though. As we all remember, higher QE leads to a weaker currency. And then when it comes to...
Yeah, that's what I wanted to jump in on, Jordan. Just forgive me for jumping in, because I think that's absolutely critical. Why QE in Europe and an increase of flows into the continent off the back of optimism actually results in a weaker euro. Now, that would be intuitive for a lot of people outside of Europe. That's what we're used to. I'm just wondering why that will play out this time around in Europe.
Well, it's wrong if the curve doesn't flatten. So if we get somehow QE where the curve steepens, which would be quite bizarre, then you could see higher yields and then the euro goes higher. But that's really not going to happen. What should happen is higher QE, flatter curves, and less attractive risk-free rates in the euro area via bonds, and therefore you see less inflows into euro area chasing those rates. That dynamic does change if you somehow see foreign investors think, you know what, I know value investing has told me that European banks are cheap, and I know that it's been saying that for years, and I've ignored it, but now's the time to do it. If that was to be the case, and you saw inflows on the equity side into European banks, for example, and other asset classes, that could be a dynamic change in euro heads higher, and that could be the risk-on dynamic. But euro is not really been trading like that, and I don't see the QE package making everybody buy banks.
Jordan, just taking a step back, I'm wondering, given the fact that the U.S., Europe, and Japan are all engaging in unprecedented fiscal rescue packages and monetary easing, how much will this essentially and eventually benefit emerging markets, which really haven't seen it up till now?
Well, I guess until we know the end, when we know there's an end point. So if there's an antiviral solution, or if there's a vaccine developed, I think that's going to be the day when we can all truly say the worst is behind us. And in terms of the word stimulus as well, we have to bear in mind it's not really a stimulus for a government to order everybody to stay at home and everyone to work from home if they can. The stimulus that we're seeing is just trying to offset the damage done by these social distancing measures. So it's also about getting the balance. It's when we know that we're not going to have a second wave, it's when we know there's not going to be a third wave, then I think we can start thinking more broadly about being as long risk as you can. But these emerging markets do have hard dollar debt to pay. They also are overexposed to certain sectors such as trade and tourism. more than developed countries are, and that's why those EMs will still remain under pressure until we get those big questions answered.
Hey, Jordan, good to catch up with you, mate. As always, fantastic to have you with us on the show. Jordan Rochester there of Nomura. Lisa, Jordan mentioning the banks over in Europe. We've had a big couple of days for the European banks. Deutsche Bank on my screen over in Frankfurt, Germany right now, up by 4.5%. The optimism, I get it, it's real. I just wonder the reality around the situation. The likes of Austria and the Netherlands, are they behind the package that people are talking about? Has their position moved? Because that's what's critical here. People can throw around bigger numbers, but if it doesn't have the support, the bigger numbers don't mean a single thing.
Well, there's also a question of whether these banks just are coming off incredible lows. They've been in a bear market for a really long time. European financial is doing particularly terribly. And Deutsche Bank's Christian Saving coming out yesterday and saying that part of the issue that they're seeing is a continued momentum in their trading revenues, particularly fixed income trading. So there is that kind of tailwind.
What's up, chat? Where you guys from? Bless me. Oof. Go. All right, I'm back, chat. Took a break from the computer for a bit. Giving them much time to finish up. The pre-market's still going on. A lot of people can't trade right now. I can trade, but a lot of people still can't. So, but you're still seeing some positive movement still. So it's good. Yeah, you're still seeing some good. Wait, what is this? 2705. Did I got it right here? No, I think I got it at 3705. There we go. You've still seen some positive movements.
And Bloomberg's learned that Russia wants to start easing oil cuts starting in July. That would be in line with the OPEC Plus deal struck earlier this year. Since the agreement was reached, Saudi Arabia tried to prop up the market with additional cutbacks. OPEC coalition members are weighing now whether to extend the cuts or reduce them as planned.
But everything's still looking
Bloomberg's
good.
learned that Amazon is in talks to buy driverless vehicle startup Zoox. Other companies in the automotive and chip industries have also had talks with Zook about an investment. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Richie Gupta. This is Bloomberg.
No one's going to come back down. I'm going to get in, take it back up. I'm just playing a patient game, but also I have so much hold positions anyway. I have so much hold positions anyway, so that's decent my words right now. Being greedy, getting into a trade. I'm positive on every single trade right now.
No one tells you what to expect when you're expecting a new pet.
Obviously these numbers
Benny,
aren't
we
up
need
to
to get
date
you a
because
crate,
these
training
are,
trees, potty pads. But with Chewy's low prices,
this is my
you'll find amazing deals on
my
everything
return,
you need for your
my
pets.
percent return I have.
Oh, even those
This
toys?
is
You can
from
save
the
on
market from
toys,
yesterday,
food,
back in the
treats,
market.
even your pet's prescriptions.
Number,
What about leashes,
let's
a bowl, his ID tag? You can get it all at a great price. Even the shipping is free. So what are you waiting for? Start saving at Chewy today.
Save 30% on your first order at Chewy. a box of videotapes,
See if I
film
can get,
reels,
like,
or
a
photos that are
percentage of
degrading,
return
Legacy Box
in the
professionally
pre-market.
converts
See
them
if
to
that's the
DVDs,
opposite.
thumb drive, or the cloud. Legacy Box is simple and safe, with over 500,000 satisfied customers. Visit legacybox.com today and get 40% off.
Silver American Eagles have become some of the most desirable coins for investors looking to acquire
Looking
precious
at my
metals.
settings right now,
Investors who
seeing if
acquire
that's
this
what's up.
coin do so for the value and
guys
diversification
wanna know
that
what I'm
silver
doing.
brings to an investment portfolio. And now, with help from Monex, you can begin investing in Silver American Eagles. Monex has account representatives standing by who will answer your question about investing in Silver American Eagles and any other silver coin available from Monex. Call Monex now or visit our website where you will see all of our silver products available for investors like you, along with live up-to-the-minute prices. Call right
does
now
that show me
and discover how
return
simple it can be to
percentage?
have your pure, high-quality Silver American Eagles delivered to you or stored for you in an independent third-party vault. Call, learn, and invest with Monex, one of America's trusted names in precious metals
that's high.
for more than 50 years.
I'll figure it out.
The hottest new razor is taking the men's grooming world by storm. MicroTouch Solo, the hyper-advanced full-body razor that trims,
Really wish I picked
shapes,
my nose,
edges,
but
and
it's always
even
easy to say
shades
that.
with micro-precision. Dual-sided German stainless steel blade. Shave up or down at 200 microstrokes per second.
Oh, let me
Snap
finish
on the
checking my
guide
latest
to
stocks.
perfectly
Let's see
shape
what
your
we got.
full
This,
beard and keep new growth stubble trimmed exactly to your style. Snap it off and remove unwanted hair anywhere. Full body control with one tool. Call 1-800-808-1721 or go online at microtouchsolo.com and get yours now for only $19.99. Complete with German stainless steel blade, pivoting head, built-in spotlight, and 3 custom grooming guides. The all-new MicroTouch Solo Full Body Groomer. The one tool that does it all.
Fuel, corn, livestock, precious metals. Commodities are everywhere, and so is Bloomberg. Bloomberg commodity indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
Think about the news flow over the years. It's been mainly on the other side. It's been all bad stuff about breakups and defaults and credit downgrades, etc. But this is a game changer, and 500 billion could be the start. It could be 3 or 4 times this.
A good friend of ours, Steve Major of HSBC, weighing in on the stimulus that we could get from the likes of Europe. That's given the market a lift, or at least a helping hand. Here in the United States, it means equities are higher by more than 1 percentage point. On the S&P 500, up by 35 points. So the FX market, talked about this a lot this morning, a stronger euro off the back of this. Euro dollar through 110. Just 10 days ago, we were 108 flat. So we've moved 2 figures in just over a week. 110.14, up a third of 1% on the session. That's the stimulus conversation over in Europe. Here in the United States, Lisa, as I get set to step away and prepare for the next hour of programming on TV, I can say on TV and on radio as well, at 9:30 Eastern, we'll be catching up with the New York Fed President John Williams on the next step for the Federal Reserve. They have done a hell of a lot over the last couple of months. I just wonder what we can expect for the months ahead.
Yeah, how much are they preparing to do more, and how concerned are they about elevating valuations to such a degree when they are not going to backstop solvency risk, which seems to be very much at the forefront? John, we'll let you...
I don't think they're concerned at all. I don't think they're concerned about it at all. Otherwise, why on earth, Lisa, are they buying junk bond ETFs?
Yeah, although they do discern...
Damn, them boys wrong. I want to hear none of that. It's all good. Just talk money anyway. All right, starting from top to bottom. Let's see how these markets looking. Alibaba still dancing around this number. I have 2 shares here. I sold it when it was at, I think I sold it at like 212 or something. I sold it around 212. I can't remember. Got it at 193 and I sold at about 212, something like that. I don't remember. But I just held that position just to see what happens. I don't know. American Airlines finally trying to do
will
something.
likely lead at some point in the near future to special status removal, although the president will have the ability to make that bigger or lesser, depending on how he wants to run this. So a lot of things and a lot of risk coming from these actions.
Another stock that I've been buying.
Leland, who would that hurt more, revoking the special trading status? The U.S. or China?
I got 250 shares.
Well, it's not really going to hurt China directly. It's going to hurt Hong Kong, and that's the main problem with this, is that most people in Hong Kong are very, very opposed to the fact that Beijing is stamping out their liberty and doing away with one country, two systems. That's why this is an automatic move in regards to Article 23. I think the United States will have to move forward, particularly if you start seeing aggressive actions. When the NPC, when the National People's Congress language is announced, you'll have a question of whether it's going to be, softly introduced, or whether you immediately see the security services pulling people out of their houses in preparation for, Tiananmen Square anniversary is next week. It's a huge political anniversary. So depending on how the Chinese handle this, you could see a very fierce reaction in a matter of days, or you could see this as a slow boil through the next couple of months.
I'll probably get out this one.
Leland, why is Beijing doing this now?
Let me see.
Well, I think that it's tempting to look at this through the prism of U.S.-China relations, and certainly there's an element to this. But the reality is that in September, Hong Kong has legislative council elections, and just like the lower elections that were held a number of months ago, pro-Beijing forces look like they're going to do very, very poorly. So if you're ever going to sort of tighten the screws and put in some stronger laws that give Beijing control and make sure that Beijing's not embarrassed in September, you really have to act now this summer in order to change the landscape so that Beijing is not embarrassed in September. So a combination of what's happening externally and what's happening in Hong Kong domestically has created this window where Beijing has to act, and probably act aggressively if it wants to change what's going to happen in the fall. And it looks like that's what it's doing right now.
It's already got 30 more. So
John and I were talking throughout the morning about how markets are pretty much shrugging off a repeat of what we saw in recent years with respect to the rising tensions between the U.S. and China over trade. A lot of people saying phase one trade agreement still on, both countries need it. You're saying it's basically dead in the water. Why do you say that?
Well, look, when people hear sanctions, they're right to sort of roll their eyes a little bit, say, how meaningful are these sanctions going to be? Is it Congress or is President Trump really going to sanction the very high-level Politburo members with freeze their assets, do some big-time moves on the sanction side? Probably not, at least right now. So they're right to not take sanctions too seriously quite yet. But the special status is a really big deal. And if the United States pulls that back, then it changes the U.S.-China relationship quite significantly. And look, it reflects the overall deterioration of the U.S.-China relationship going into the fall. I mean, it's getting very, very toxic. And, my belief is it's going to be very hard for the president to stand by the phase one deal. When he's not seeing the deal fulfilled, he's going into a very rough election season. China's the topic of the day. Who's meanest to China is the guy who's going to win this. and he's going to have to stand by the deal until he can't. So I think phase one is in real trouble. I think it's likely we don't see it survive the election. And this is just a reflection of the overall toxicity of the
$24, and I got another entry at 20.
Leland Miller, CEO of China Beige Book, thank you so much for being with us and for your insights. I know you guys look really under the hood as far as the granular economic data. We'll have to have you back to talk about the reopening there and what we have seen in terms of an economic recovery. Right now, in terms of recovery, we're certainly seeing a lift to equities across the board. The S&P futures not quite at that 3,000 level, but just inching up to 29.91. The Dow up 529 points. You're seeing a bit of dollar weakness. The euro strengthening. Coming up on Bloomberg Television and Bloomberg Radio, a conversation with New York Fed President John Williams, really looking at whether there is any unease about the fear of missing out trade, the FOMO trade, percolating through all assets. I'm Lisa Abramowitz, together with Jonathan Farrow and Tom Keene. This is Bloomberg Surveillance.
Bloomberg Television, brought to you by Principal Financial Group, committed to helping global investors manage volatile markets with specialized portfolio solutions. Get to know us at Principal.com.
To everyone navigating these uncertain times, whether you're caring for your family at home or those at work, Principal is by your side. We're working hard to answer your questions, like helping you understand what the recently passed economic package can mean.
If it goes up, then hey, good. Mutual fund, fifth one, the dividend play, but I will take profits when they come up eventually. This one's not open yet. I think it's 9:30 Eastern Standard Time. Those are my previous trades. Let's see what's going to happen today. Oh, it was Coca-Cola. That's what I would do. That's the one I was looking at. Oh, I do have it on my list.
From New York City for our audience worldwide, good morning, good morning. The countdown to the Open starts right now. 30 minutes away from the opening bell this Wednesday morning. Risk on. We add some weight to yesterday's moves. The S&P 500 just off session highs, rolling over just a touch, but still elevated by 25 points, up 0.8%. There is nothing like a change in price to rewrite the narrative, and the price is changing higher. In the bond market, Treasuries just a little bit lower over the last couple of days, yields just a little bit higher. We erased this morning's move with a 10-year at 0.7%. And in foreign exchange, we've seen a stronger euro off the hopes of a fiscal package coming together on the continent that will...
We hear it over and over from investors. I wish I had bought Amazon or Netflix when they were first recommended by the Motley Fool. I'd be sitting on a gold mine. And it's true. If you had invested in Amazon...
That it does get cleared by the House, but something to definitely watch in the days to come. Now, this does add to a number of other measures the U.S. has considered pursuing that could strain relations with China. The Trump administration is also reportedly separately looking at sanctions on Chinese officials and entities that enforce a new national security law encroaching on Hong Kong's autonomy. And that's according to a Bloomberg report from yesterday afternoon. That report did send stocks pairing their advances in the last 30 minutes of yesterday's session. Now, Chinese officials have indicated they would retaliate if the U.S. does step in over Hong Kong. So seeing how these next pieces of policy play out in the days and weeks to come will be something to keep an eye on. Alexis?
All right, I want to switch gears here and talk about the U.S. housing market, Emily, because despite this pandemic, we're seeing applications for mortgages to buy a home rise. They're now up for the 6th straight week. I mean, could it be that housing might actually lead the recovery post this pandemic?
Well, the housing market really has shown strong signs of a rebound from the depths of April. If we think about this information that we got on mortgage purchase applications, those were up 9% last week for the week ended May 22nd on a seasonally adjusted basis. 6th straight week of advances for that index and a jump of 54% in purchase applications since early April. So the level of this index is now back to the highest level since mid-March. So again, more positive signs for the housing market. This coming on the heels of the unexpected rise in new home sales we saw in the Commerce Department's monthly report for April yesterday. And those had been up almost 1% versus a drop of more than 20% that had been expected. So really seeing some green shoots here, particularly when we're looking at home building.
All right, I want to ask about Ralph Lauren. The stock rallied along with a lot of the retailers yesterday. It was up about 11%. I see here in the pre-market, it's off about 0.5%. Ralph Lauren out with earnings this morning. What can you tell us?
Well, we did see better than expected sales for Ralph Lauren, but it swung to a steeper than expected loss for its fiscal fourth quarter. And that's something that really did spook the street. And taking a look at those comparable same-store sales, we also saw those drop 17%, a bit shallower than the 19.3% drop expected. But when we look at sales across regions, we did see them taking some hits in some of their largest segments. So we saw North American revenue down 11%, and that is where the company gets almost half of its overall revenue. They did provide an update on their store reopenings, although they did suspend future financial guidance. And taking a look at that, we have the company saying that they're assessing reopenings on a location by location basis. We have also reopened approximately 2/3 of our stores in Europe and nearly half of our stores in North America through the last half of May. So as we do see these retailers coming back online, as states and different countries do start to reopen, something to watch for retailers and something that could spur a potential rebound. Alexis?
All right. Thanks a lot, Emily. Hey, good morning, Brian.
Hey, top of the morning, Alexis. Let's head over the seas and check in with our very own Edmund Heafy. Edmund, got some details on the new EU stimulus plan. What can you share?
Yes, Brian. Under this plan, the European Union will borrow 750 billion euro. That's more than $800 billion on the financial markets. And this would be totally unprecedented in the bloc's history, marking the first time that EU countries have jointly issued debt at any kind of scale. Just as significant is the fact that 300 billion euro of the fund will be distributed to European countries in the form of grants rather than loans. And this is quite a contentious idea Austria, Denmark, the Netherlands, and Sweden, known as the Frugal Four in the EU, have argued that the whole package should instead come in the form of low-interest loans. But countries like Italy, Spain, Greece, and France are already heavily indebted and have been pretty badly hit by the pandemic. Italy and Spain together will receive more than 300 billion euro in combined grants and loans. They're obviously two of the worst hit countries. And markets are reacting pretty positively to the news, although there are plenty of hurdles before this plan gets approved. Stocks in France and Germany are up by around 2%, and stocks in Spain are up by 3%.
I mean, pretty surprising. I understand the market's reaction to stimulus, but ECB chief Christine Lagarde is out with a pretty dire economic outlook. Her latest in what has been, I think, a series of realistic outlooks from her.
Yes, Brian, Christine Lagarde's prediction really underlines the scale of the crisis facing the Eurozone, the EU's common currency area. Lagarde suggested that Eurozone economic output could contract by between 8 and 12% in 2020. And this basically means that the ECB president has ruled out the mild scenario that the central bank had previously outlined. But she did say it was very hard to forecast how badly the bloc has been affected. One positive note, however, is that she ruled out the possibility of a Eurozone sovereign debt crisis and said she was not overly concerned about high debt levels in the bloc.
All right, Emin Heafy, thanks so much.
Now, despite progress being made, we are still seeing cases of COVID-19 on the rise. Here are the numbers for you from Johns Hopkins. Worldwide, there are 5.6 million confirmed cases. That has resulted in nearly 351,000 deaths. A large portion of that is coming from the U.S., where there are now more than 1.6 million confirmed cases of COVID-19, and the death toll is nearing 100,000. Anjali Khemlani is with us this morning. And Anjali, I've been reading about a new service that Quest Diagnostics is rolling out to help people return to the workforce after working from home for a few months. Tell us about that.
Absolutely, Alexis. So Quest is rolling out basically a package of services that it can offer, including antibody and swab testing, temperature checks, questionnaires. And that's sort of what they've been able to provide to large and small employers alike. And it's something that even LabCorp has done. So you see these large commercial labs really offering, some sort of plan and some sort of, service that companies can lean on while they're considering reopening. There are debates about whether or not antibody testing is relevant or useful for such an occasion, or whether or not, using these types of tests as an all clear to get workers back in the offices is helpful versus just continuous testing, and what kind of pressure that will place on supply chains. But for right now, it appears to be, one of the only options. Quest is a little bit more interesting in the sense that, it does offer a wide variety. So for larger multinationals, it does have a network.
Actually, I might add more to that.
Lean on to help, coordinate for any one large company, and then for smaller companies, sort of leaning on its consumer sites and other local spots to help businesses get workers back in the building. Alexis,
can you tell us where testing stands right now? Because I was also reading that some epidemiologists are actually confused by what the CDC has been doing. They've sort of been taking the tests that you would give someone to see if they've had COVID-19. They've been intermingling those tests with the results from the antibody test. And they say that's very difficult to be able to trace accurately. And we know tracing is one of the big important components to getting economies back up and running, getting people back into offices. So where do things stand there?
Absolutely. Yeah, that has been really confusing, especially when you consider, the struggle that the CDC has faced and the country has faced in being able to offer enough testing. And so the question about whether or not that's being done to boost the U.S. numbers in testing, or whether or not, or what the value of sort of combining the knowledge of how many cases are in fact out there, that is an ongoing debate. And a lot of experts are very concerned about, in general, undercounting as well, right? We've heard about those cases where people have had the virus or do have the antibodies but never got tested, or people who have passed away without ever getting tested, but autopsies show that they did in fact have the virus. So a lot of confusion, as is expected during an outbreak, and still waiting to see, what the analysis will show.
All right, Anjali Khemlani, thanks for that. And as we were talking, we see stock futures have turned mixed. NASDAQ futures now in the red by about 20 points. Dow futures, though, up nearly 300, and S&P futures up 23. Coming up next, why President Trump is not too happy with Twitter this morning. More of that when we come back. Welcome back. The Senate is on break this week, but another relief bill may be on the agenda when they get back. Senate Republican leader Mitch McConnell told reporters yesterday that Congress will, quote, probably have to pass more stimulus, depending on how the reopening process goes for the states. Jessica Smith is with us this morning from her home in D.C. Hey, Jess, good to see you. So what do we know about this plan? What is in it?
Well, Majority Leader McConnell says that he wants to see liability protections for business. He has been very adamant about that, saying that is one of his top priorities. It's a must if there is another stimulus package going forward. He also said yesterday, if there is aid for state and local governments, he wants that to be directly related to COVID-19. That's something Democratic lawmakers have been pushing for, more money for state and local governments. Republicans have been resistant to that, but again, yesterday saying that it needs to be specifically tailored to lost revenue or expenses from COVID-19. Now, over the past few weeks, while Democratic lawmakers have been pushing for more relief, we saw the House pass that $3 trillion relief bill. Republicans have been saying that they wanted to wait and see how implementing the other bills went first, but in recent days, they've seemed more open to the idea of another relief bill. Majority Leader Mitch McConnell said, we'll see in the next couple weeks what happens if there is another bill, but he says it is likely that another will be needed. Alexis.
So basically, there's no chance that that $3 trillion bill that passed the House even makes it to the floor of the Senate?
No, that's dead on arrival in the Senate. Majority Leader McConnell has been very firm about that, saying the Senate is not going to consider that. And he said yesterday that this bill, if there is another bill, would be much more narrow. The Senate is not going to take up another $3 trillion measure.
All right, Jessica Smith, thanks for that. Good to see you.
You too.
Well, President Trump is not very happy with Twitter's latest fact check 2 of his tweets. The site added a little blue bar at the bottom of some tweets, inviting users to, quote, get the facts. So the president responded on Twitter, of course, accusing the site of trying to stifle free speech. Our senior columnist, Rick Newman, joining us now with this. Looks like the president is picking a fight here, Rick, but just tell folks what this is about exactly.
Yeah, so Twitter has never fact-checked President Trump before. He has said many untrue and dishonest things on Twitter, and there have been calls for a long time for Twitter to do something about it. They've resisted. So this really heated up recently, not because of the 2 tweets regarding absentee ballots, but because Trump is now going after the MSNBC host Joe Scarborough in regard to a woman who was an aide when he was a member of Congress in 2001 who died in his office in Florida. It was an accident. She had some kind of unknown heart condition. She apparently fainted, hit her head on a desk, and died. I mean, it was tragic. She was 28 years old. Well, Trump is now calling this a cold case, an unsolved mystery, and he's suggesting that Scarborough is somehow involved in this and that it might even have been a murder. This is all completely bogus. And the woman's surviving family members have asked Trump to stop it because it's obviously hurtful and cruel to the family members. And he, even this morning, he is going after it again, calling it a cold case. So he won't stop it. So there have been a lot of calls for Twitter to do something about this, which could be banning Trump from Twitter or putting some kind of mark on these tweets regarding this. That is not what Twitter is doing. They are not addressing this issue with the woman who died in 2001. All they did was go after 2 other tweets Trump put out recently over mail-in ballots. We know that he says this is fraudulent. It is not fraudulent. So these are the 2 tweets that Twitter went after, and they haven't explained their rationale, but you can kind of guess that their rationale is to intervene in this way when it involves something relating to the election rather than one claim by a public figure such as Trump against somebody else. It's a mess. Twitter has to know this is going to just be a firestorm, but this is what they're doing for now.
You know, speaking of the election, I mean, how does this play out in terms of public perception for Trump as we move closer to that November date? I mean, he's got enough on his hands, one would think, trying to deal with this pandemic, and now he's picking a fight with Twitter.
Well, I think that's probably deliberate. Trump seems to think that picking fights with just about anybody works to his advantage. And let's keep in mind what he's trying to do here. He's probably trying to distract everybody from what's going on in the economy, which is terrible, and what's going on with the pandemic, which is we're not doing so great. I mean, just for comparison's sake, New Zealand today said they no longer have anybody in the hospital for COVID-19. They have essentially beaten the virus. And here in the United States, we still have thousands of people in the hospital. Cases are rising in some states. We're about to hit 100,000 deaths, and we've not done a good job. Trump is getting increasingly bad marks in terms of his handling of the virus. And what he's probably trying to do here is just find some kind of dust up or fight he can pick to distract people from the 2 things he doesn't want anybody to notice: a terrible economy and lackluster or subpar handling of the coronavirus. So, Trump's deflection strategy is, when in doubt, pick a fight, and he's picking a bunch of them right now.
Rick, what's the probability that the president is kicked off of Twitter ahead of the election? And for some reason, if he is kicked off, does that push him onto Instagram, TikTok, Facebook? Where does he go?
I can't imagine that Twitter would do that. I mean, the response to this controversy with the quote, the bogus cold case, I mean, it's really tepid. All they're doing is adding a line at the bottom. And remember, of all of Trump tweets, it's only 2 tweets that they've decided to put this line in there. And all they're saying is, this line basically is get the facts on absentee voting. And then they link to a couple of news stories. So they're not, they could be blocking these tweets. They're not doing that. And they seem to have a very, very selective criteria for when they're going to get involved here. So I think there's no chance Twitter could ban Trump. And that would, probably turn Trump into an even bigger victim in his own eyes and some of his supporters. And he would have to find another platform, but I don't see any chance it's going to happen.
And Alexis, you have a new election omics podcast hitting, right?
Yeah, Rick and I, we sat down yesterday with Lee Miringoff. He's the director of the Marist College Institute for Public Opinion. And Rick, I thought it was a really good conversation. And it's kind of ironic what we were talking about at the time we were talking about it. I think what was happening with President Trump's tweets was happening in real time, because one of the things we discussed with Lee was mail-in ballots and how President Trump does not want mail-in ballots. And he's also threatening to maybe pull the convention from North Carolina if the governor there doesn't allow it to go on at full capacity.
Right. And the polling by Marist and others shows that voters, they want mail-in ballots. I mean, especially if the pandemic is still an issue come November. I mean, people want the ability to vote from home and just mail it in for safety. I was also interested, Alexis. We asked him, why should people trust the polls in 2020, given that they got the outcome wrong in 2016 for the most part? And he had some very interesting things to say about that, how polling has changed a little bit, and what polling actually gets right. So I think there's a lot of stuff for people to check out there.
Yeah, so do that. If you have a little extra time this week, Electionomics is available on Apple Podcasts or wherever you get your podcasts. All right, stay with us. We've got the opening bell coming up in just a few minutes here on The First Trade. We'll be back after this short break. About 7 minutes away until we get that opening bell on Wall Street. Let's check in with Jared Blickery for a look at what's moving these markets. And Jared, I see the NASDAQ is actually down, but Dow futures and S&P futures rallying.
Yeah, that's right. The tech-heavy NASDAQ lagging for the second day in a row. Tech really having a hard time here. But on the flip side, financials, industrials, real estate, materials, energy, all outperforming for the second day in a row. Those have been some of the biggest laggards. So it's nice to see them rallying here. And we can see in the Dow heat map, tech kind of under pressure. Apple's about break even, but Microsoft underwater there. But I do want to point out the financials. JP Morgan up over 5% in the pre-market. It was up 7% yesterday. Nice roll for it. Goldman Sachs also up more than 3.5%. And it managed to take out its April high yesterday. That's a significant development. We want to see that happen with some of the other stocks and sectors, such as financials and industrials. Boeing also doing well. That's up nearly 3% after being up about 5% yesterday. So let's take a look at the NASDAQ as well. And we can see kind of a mixed picture for a lot of the big cap stocks, most of those in the red, although Alphabet nearly positive. Facebook for the first time in several days, not making a new all-time high. Just kind of sorting by performance here. We're going to see the airlines doing well again. United in the upper left corner, if you can see it there, 16% yesterday, up another 8% in the pre-market. And just looking at some of the other sectors here, we can look at the industrials. those are mainly doing very well as well, Alexis.
We're also seeing some moves in the currency markets today, Jared, particularly the yuan in China. What have you got there?
Yeah, so just looking at our world currency map here in particular, we can see the US dollar is up nominally, but against the yuan, a very big move overnight. We got to pay attention to this because when the US dollar advances this much with respect to the yuan, a lot of times that's correlated with a rising VIX, which means equities get under pressure. This is something we're going to want to monitor because we're threatening basically multi-year highs here. And if we look over the last 6 months, we can really see this breakout taking shape. There you go. So that's something we're going to be monitoring throughout the day here, Alexis.
All right. Hey, Brian, I know that you've been watching the retail sector. This morning we got numbers from Ralph Lauren. Also Macy's, we know hurting during this pandemic, even before the pandemic. It was able to raise some serious money recently. What's going on with both those stocks today?
Yeah, Alexis, Macy's, that's just another red flag. Obviously, it's a byproduct of the stores being closed, but here's a retailer already in heavy amounts of debt, adding more than $1 billion in new debt onto its books. You don't want to see that, especially given the declining margins in the business and the pressured sales. But also Ralph Lauren, they're out with earnings this morning. Sales down double digits pretty much across the board. The only minor bright spot, their inventory was down 10%. But it's going to be a tough holiday season for a wholesale retailer like Ralph Lauren. Yeah, for sure. And also Papa John's back in the news. What have you got for us there? Yeah, I tweeted out, I was joking around on Twitter, Alexis, that if you didn't eat a piece of a slice of Papa John's the past 4 weeks, your neighbor sure did. Their sales in North America for the past month, same sort of sales, up close to 30%. That is just abnormal. The fact is, a lot of restaurants are shut down, and companies like a Papa John's, Domino's, they've done a good job with contact delivery. We've had the CEO, Rob Lynch, on talking about what they've done. They've done a good job, and they're being rewarded.
All right, guys. A lot for that. We're nearing that opening bell. Coming back, we're going to speak with Steve Shaw. She's chief strategist at Principal Global Investors about this market rally. Should you believe it? Should you be buying right now? We'll be right back. Welcome back. We have got stock futures mixed right now. Dow futures up 343 points as we head into the opening bell. S&P futures up 28. NASDAQ futures, though, down 21. A couple of headlines here for you. Disney says it's going to require that when its stores reopen, face masks will need to be worn by guests ages 2 and older. So look out for... right, a new trading day underway. We saw the floor of the New York Stock Exchange reopen yesterday without incident after being shut down for more than 2 months because of the pandemic. Of course, it's now operating with lots of precautious measures in place, including just about a third of the brokers back on the floor. The Dow Industrials up 350 points here to start this Wednesday trading day. Let's bring in Seema Shah. She's chief strategist at Principal Global Investors. We're also joined, as usual, by Jared Blickery and Brian Sazi. Good morning to all of you. Seema, good to see you again. So look, we've had a pretty nice market rally, and in some ways people are saying this market seems a little disjointed from what's really happening in the economy and consumer sentiment, which we know is its lowest in decades. But a lot of this has been driven by just a few companies, mostly tech companies. Are you concerned that we're not seeing breadth in this rally lately, and does it give you some pause?
Hi, yeah, I think you're right. I think it does. It deserves some caution when you don't have a very broad sectoral rally. It's a very, very thin market. You've only got a small percentage of stocks actually trading above their 200-day moving average. So I don't think it's a testament to this idea that there's very positive investor sentiment out there. But at the same time, I think we have to recognize that we continue to get some good news coming through. We have a number of economies reopening. We have economic data starting to improve. And we continue to hear good news in terms of stimulus measures, both fiscal and monetary as well.
Seema, JP Morgan CEO Jamie Dimon making some pretty bullish comments yesterday at a conference. I guess no surprise, he's unlikely to come out here and say his stock stinks and don't buy it. But when somebody of that stature comes out and makes those comments with the market rallying, does it suggest to you that we might get a next pretty powerful rally in the markets looking out over the next couple months?
I guess I'm still a bit more cautious about another big leg up. I think you need to have very good news at this stage to see that continuation going up. What I can see is consolidation through to the end of the year. And that will be because the market continues to be supported by central bank and governments. But the economic recovery is still going to be very, very gradual. So I still find it difficult to say that we're going to be reaching new highs within the next few months.
Seema, could this rally really get tripped up by heightened U.S.-China trade tensions? There's talk now about about tariffs being re-implemented there. Is that perhaps even more of a threat to the market than the pandemic at this point?
Well, I think back to what Powell was saying himself about 2 weeks ago, which is that, when we think about the economic risks out there and the things that could trip up markets, he pointed to one of the things being, of course, anything which results in a more negative economic scenario. And certainly the US-China trade tensions are one of those. I wouldn't necessarily put them above some of the risks around the pandemic, around a potential
your boy out here watching his money
that would result in renewed lockdowns. So certainly I think we need to be careful
up,
about
Ron,
how we possibly use China trade tensions.
Bro,
do they continue to escalate? Are we looking at a new round of tariffs?
Man.
And also,
when I'm speaking to Ron, this man is the market himself. He is the market himself.
Yeah, right. Yeah, man, I appreciate it.
What I mean? They always say there's no man on earth that knows the market. This man knows the market. I almost think he wrote the market book.
I'm just trying to get my little peanuts and run, bro. That's all I'm trying to do.
That's what I've been doing yesterday, man. And I think what's the name of that medical company? Was it Novavax, right?
Novavax or Moderna?
Yeah. But Novavax is the one that they supposed to have something. That's why Moderna went down, right?
Yeah.
So what's the ticker symbol for that? Novavax.
NVAX.
NVAX. I'm gonna keep this one in my book. Reason I don't think I'm gonna buy it. Why is it going down today? Why did it drop?
Oh, it dropped. This is great entry right now.
I mean, it is, but I'm saying like what made it drop? You know what I mean?
I mean, I would say what would typically all of the reactions are overreactions.
And it's retracing.
Yeah.
Yeah.
So yeah, it's just retracing. It's an overreaction of the market right now, but I think that's perfect. I think it has great entry right now because it's definitely gonna go back up to 50 at least, even if you're making a day trade.
Yeah, hold on, let me put that on my list.
Definitely gonna jump back up to 50. I actually have a call
NOVAX, right? Hold
on. NVAX.
Okay, NVAX. I'm gonna keep my eye on this, man. Like, if I get in, I'll probably get in. We'll see. Now is a good entry, like you said. It really is a good entry.
Yeah, it's definitely a good entry. I'd say 46 under 47 is a good entry. 100% might be back at. Yeah.
I don't know. I probably would have get in myself at least around 38, only because it was a low before it shot up.
Maybe 43. I don't know. I'd have to draw it out.
Yeah,
I'd draw it out, bro. You draw it out, bro.
Yeah, I like this part right here being an entry. Only reason why I say that is because even though I don't think it might not even touch that, but my reason is because it shot up to. That's just my reason.
Got you. Hold on 1 second, bro. I have a very important call.
Go ahead. I know you gotta do what you gotta do. Days are always good, man. When you see nothing but green. The thing about this chart that you guys see is I got into Carnival. It's not showing right now. I just got into that, but it's not showing. Only reason why it's showing this Carnival right here is because I sold Carnival and Disney. I sold all these 4 yesterday. I got them because of the news. I can get in and collect a couple pips and then leave. But outside of that, I just love waking up and seeing my portfolio nothing but green like this. It's a good day for me in these markets. It was good yesterday. It was good Friday. Hold on, let me check my oil. You see, I got in this at $21. It's already 23. That's good. Got in this one at $20. It's 25. Obviously, that's good. I got in the Bush at 57. It's 40, almost 41. Today's gonna be a good day, man. Like, you know, it's gonna be a good day, at least in the markets. Hopefully, they do come out with a cure for this coronavirus vaccine, but wow, this is crazy. I thought this was supposed to be a good start. Yeah, see, that's why I say 37. That's an inch right there. It's still dropping, and this, I mean, this didn't even show to be a support level. 37 showed to be a support level, at least in my eye, only because it tapped so many times. I wouldn't mind putting on entry. Let me see what's this right here look like. Wow, damn. They just did that to me, man. I think when a stock drops I think it's when the stock drops a certain too fast or something like that, they put a restriction on it. I was just about to hop in on that wagon too, man. They always trying to get somebody. I had it all drawn up and everything, man. I don't know about this. I gotta this. See, this is a good price, but based off of it's good because of news versus being good because of fundamentals. Like this is on a support level, at least in my eyes, on a support level. I like to get in on the support level. That way, I don't have. That way, I don't have like to worry about failing. Carnival. Let's see what Carnival looks like. I'll probably get back in on this one. All right.
Which, if you're not familiar with that, it makes products you are familiar with, things like Dixie cups and Brawny paper towels, also wood panels for home construction. Jim, good to see you. Welcome to the show. I'm curious what demand is like for these products. I know I personally really like the Brawny pick-a-size paper towel. Haven't been able to find it. Finally got through on Walmart and had some sent to the house. I felt like I got gold sent to my house. Is demand still strong for those paper goods?
Let me mute the news again.
Alexis, demand is still strong, and what we've seen across.
What's up, buddy? How you doing, man?
I'm doing good. It's always a beautiful thing when you wake up to money.
The sea green, bro. Like, you know how you see that
baby.
one that, you know how you see that red and it's like, so, you know what I mean? When you got like 90% green, you got that 10% red. Like, oh, okay, I'm up 80%.
It's green, baby.
What you looking at today, man?
Honestly, I'm all my plays are long plays right now.
Yeah. Most of mine are too.
My plays are long plays.
Most of my plays are, except for I'm looking at the spirit, bro. This is, I'm still in it. I ain't bought that many shares. I might buy some more Alibaba, to be honest.
Yeah, it's just costly, man.
It is, but
it's costly.
It's at a good spot. I don't know. What do you think?
Yeah, I feel really confident about Baba right now, but
me too.
I don't like to just buy like one share. You know what I mean?
Yeah, yeah. I try to do it based off. I'm trying to get. I used to do shares, but now I'm trying to do prices instead of shares.
Yeah.
Because $200 is real good. That was my entry point last time, but also I had an entry point at like 190. If it drops to this 190 area again, I might buy some again, and buy and take out. Because it's at a real good support level in my eye. 200 being a good.
Have you thought about GBP USD?
Oh no! I wasn't looking at that. I ain't looked at that in a while because I've been making some good stock move plays, man. You know what I mean? Like buying and selling,
Yeah. Yeah.
Because it's for me, I feel like it's so much easier to do this than to trade forex. Cause like I don't know, cause like trading forex taught me the fundamental. How we talk about taught me the fundamentals, but it's just you can bring those fundamentals onto this successful versus because like stocks on the other hand, when they go negative, just wait. You don't really lose until you take out. Like as long as the company don't go bankrupt, you still kind of win. Forex on the other hand, you can't do that. If you lose, you lose, and if you do hold, you swap fee to death.
Yeah.
So
Yeah, I like because I like to day trade, so the forex market works for me.
hmm
But um, there's just so much opportunity, right? Like the forex will be around before
hmm
and after and during this pandemic. It'll
hmm
always be an opportunity to be able to make some money there.
hmm
But right now the market is just so discounted.
Yeah,
It's so discounted right now. You have to take it into consideration.
that's why I started looking at it. Because the way this thing's set up, man.
Damn, Bank of America did a little jump.
I see that. That's
Yeah, it's looking good, man. Yeah, Bank of America, damn.
Oh, you looking at my stream?
Yeah.
I'm gonna get in on these pullbacks. I'm just waiting. I'm just being patient.
Right. I mean, see, my thing is like that's a big move right there, right? For Bank of America. It's a big move, but it's only 5%. You know what I mean? So like what's your expectation of a large move? Because like me, if I would have had it, I would have saw that jump and I would have sold. Right? Because I don't know that it's gonna even itself out. But bro, can you take a look at Hertz for me, please?
I seen it. It was like 60. Oh, it went
Can
up.
you take a look at Hertz for me, please?
Damn. It was. I know it was like 60 cents, but I couldn't buy it because it said exchange restriction. But I was gonna buy anyway. They talk about bankruptcy.
Yeah, but they filed for um. Bro, I tried to tell y'all motherfuckers, bro.
What's up?
Sorry for cursing.
What happened?
I'm just saying, I tried to tell y'all yesterday, bro.
About what?
About Hertz.
It was like I couldn't buy it. I was gonna buy it anyway because we're talking about bankruptcy.
Right, but the type of bankruptcy that it filed, it wasn't. It was
Chapter 11.
It wasn't. Yeah, it was a Chapter 11. It wasn't what you thought it was. You know what I mean? It wasn't what people thought it was. You know what I'm saying?
Yeah, I know. But the thing about it is, based off what I read, they can only be 60 cents. I mean, they can only be under $1 for 30 days on the market. I'm talking about.
Yeah.
Yeah.
All I'm saying is, if you would have bought it, you would have been up 94%. That's all I'm saying.
Yeah, but it's easy to say that afterwards.
Yeah, no, I get it. But I knew that was going to happen because it was a drastic overreaction to bankruptcy, and nobody reads the actual articles. They see that they're filing bankruptcy, but there's different types of bankruptcy. That's there. You know what I'm saying? And it still
I don't
has
want to just take
plenty.
my profits off some of these jumps, man. And we get back in. I don't know.
I gotta tell Matt. Because Matt was going back and forth with me like, I'm not gonna touch Hertz. That's what I'm saying, bro. I almost just doubled my account on Hertz, bro.
I might buy some Alibaba now, but if it touched this 194 mark. What's called? Let me look at this up now. You gotta see what's causing this thing to tank.
Say that again.
I'm trying to figure out what's causing Alibaba to drop ratings.
What candlesticks? What time frame are you on right now?
Daily.
The daily. Those are all day candles.
Mm-hmm.
Bro, I literally told like 7 people about Hertz yesterday. There was only one person that went in with me.
Are you in it?
Mm-hmm. Yeah, it was like an IPO to me. Like I didn't put that much in, but it was under $1, so I bought a couple hundred shares. Watch this to see if there's another entry.
Yeah. Nah, Hertz was it, bro. Hertz is it.
I mean, and for the week, it's still down 63%. So imagine that. You know what I mean?
Mm-hmm.
There's still a lot of upward potential.
I'm gonna invest about $10. Nah, that's not going down. Let me see what happens.
Hertz paid out $16 million in bonuses days
I
before
seen that.
bankruptcy.
Mm-hmm.
I don't know, bro.
I seen that too.
Yeah, bro. I'm out at 115. I'm just looking for another entry.
Mm-hmm.
Like I think if it drops to under $1, I'll probably back up. So I think it's gonna easily get back to 2. You know what I'm saying?
Mm-hmm.
Like even if you graph that out, it's gonna get to 2. It's about to get there. It's about to hit $1. What do I do? What do I do? just gonna wait for the confirmation of it coming back up.
I only put $10 in just to see what happened.
Where'd you toss it in at?
Like right, the price is out right now. I'm not serious. Just it's $10. Yeah. Now sometimes it's let's see. I kind of want to sell this American Airline, man. I've been holding on to it for a long time. And I ain't really been doing nothing, man.
Open my Thinkorswim. I got some more bread in there. You know what I'm saying?
Oh yeah. That's how. So, yeah, let me check my Robinhood real quick. Okay, Robinhood fit me on top. You know what I'm saying? Let's see today's returns. Ooh, today. I mean, it's alright. Ain't doing too much today though. I'm gonna sell this American Airlines stuff. I think I'm gonna sell it. I don't really like it. I'm gonna get back in on it later.
Hertz doesn't want to drop under $1. I see you, Hertz. I love making fucking double plays off of.
Highly secure the bag on American Airlines. I'm cool with that, man. American Airlines. What's up, Japan? You trading AAL? Yeah, I sold my shares only because when the coronavirus started, I like to I buy down because you don't know what the bottom is, and I think I normally buy no more than 3 times, and which was these three buys right here, and then it came up, and I just sold because I want to reposition into the trade. One, I want to reposition. Two, they were talking about bankruptcy, you know, but also not even that. I knew it was going to pull back because yesterday was early, and it's got to retrace, and that would give me time to reposition into the trade at least a better price compared to what I had before. Like I made profits because I bought some here and I bought some here, and I sold it. Like, I don't remember what did I sell it for? 11.77, and I had 250 shares, which was enough to make a little bit of profit. But I want to wait till it forms a better support level because I bought it during the initial fear of coronavirus. But now that we know what's going on, I can get a better entry. Big man, yeah. I mean, I've been making some good trades, man. Today, I trade my Carnival. I don't trade stocks or options. Yeah, nah. I started off doing forex. I realized this is better for me, man. Stocks is better for me. It's not that bad at all. I got in. I bought. I had like 570 shares of Carnival at $9 and sold it at 16 yesterday. Made profits on that. And I think I had Disney as well. I had 50 shares at $90. Sold at 122 yesterday. 121 yesterday. So that was yesterday. So I'm gonna let this finish doing what it do, and I'll probably get back in. Actually, I won't even. I might not even get in there. I might get into like Delta or what was the other one? Southwest. I'm just keeping my eye out on the stuff. Hmm.
To 12% over the last 12 years. And those are the companies that can take that free cash flow and augment their growth through buybacks, dividends, acquisitions, which is more powerful in a slow growth environment. And then finally, the fourth tailwind, and somewhat surprisingly, is that the decline in the risk-free rate has a positive impact on growth company valuations because a bigger component of their discount rate or their valuation is actually the risk-free rate because they're not perceived to be as risky as, say, value companies, which have a bigger equity risk premium component of their valuation. And so you could actually imagine a scenario where large cap growth stocks sell at a higher multiple in the future relative to where they were prior to the pandemic because of the decline in the risk-free rate. Meaning the risk-free rate here, meaning the 10-year Treasury bond. So we think that the of large cap growth investing led by the mega cap tech stocks is really just getting underway.
Justin, what keeps you awake at night on the markets as we look towards the back half of the year?
Well, look, we have a lot of stimulus that needs to be maintained until we hand this off till vaccine and people get more comfortable fully engaging back in the analog world, going to work, et cetera. So we need to see further positive developments on the availability of vaccines. And I'm confident that that will come. The growth stocks are maybe due for a little rest here, and the value stocks have a little bit of catch up. But I think the opportunity set over the longer term and into next year really is with the growth stocks. And so you would want to be buying the dips and probably selling the rips in the value stocks. The one thing that could go wrong for growth stocks is, a big uptick in regulation, which we don't see near term. If anything, the large cap tech companies and the large cap, drug companies are perceived to be helping society during the pandemic, firstly as a communication mechanism with the tech companies. And secondly, the drug companies are really solving, this horrible disease that is populating.
Justin, what are you hearing from clients right now? Are they more willing to part with cash? I mean, were they sitting on more cash just a few weeks ago, and are they putting more of that back to work into the market now, or have you not seen that happen yet?
Yeah, so our investors sat tight during the pandemic, and so we were encouraged by that behavior. But you've seen a big increase, to your point, in money market funds. So the cash that has gone in and is sitting on the sidelines is substantial, which makes sense because some businesses and so forth are in more difficult situations and they want to take a wait and see approach. And so as the recovery takes hold, you're going to see a lot of that cash find its way into the market and into financial assets. Now, which financial assets is the question. And I think what we can observe is with interest rates so low, it's just very difficult to get anything more than a return of your money rather than a return on your money. And so we think that money will continue to try and find homes where it can invest in stocks and equities and companies that can continue to grow their earnings over time. And that earnings is really, the big tech, consumer, and innovative healthcare companies, really the large cap growth cohort we're talking about. So that's how we think you can generate returns over the long haul by buying companies that can grow their business.
All right, let's leave it there. Justin Kelly, CEO and CIO of Winslow Capital. Thanks for taking some time this morning.
Thank you, Brian.
Do stick around. Much more ahead on the markets on the first trade.
Sir.
Yo, what's up, man?
How not mad at you at Hertz right now?
Why?
You said you went in, right?
Yeah. But I only spent $10, so.
You see what it's doing right now?
What is that? $1.13?
$1.14.
Yeah, I ain't trusting these plays.
You can't be mad, bro.
I don't trust these plays, bro.
Take your 50 cent and run, dog.
That's it, bro. Take my 50 cent and run. You think I should?
Nah, I mean, I definitely think it's gonna hit the support right now. Give me another opportunity, unless it breaks through and goes back to $2. Oh, it might. It just hit a new high, 117. Oh shit. Oh lordy. Yeah, bro.
Damn, take my 65-cent dip, bro. That's some soda right there.
Bro, it's hitting resistance right now.
I'm at 74 cents, bro. That's quick. Well, you didn't get that nowhere.
That's how we stack up these nickels and dimes.
Shoot, 83 cents.
Welcome back to the first trade. SpaceX is set to make some history today, launching the company's first ever crewed space flight from NASA's Kennedy Space Center in Florida. Yahoo Finance's Inez Ferrer is here to break it all down. Inez, I know you're a big space fan.
I am, Brian, and this is just so exciting because this is exciting for the U.S. It's the first launch of astronauts to the ISS from U.S. soil in 9 years. The U.S. doesn't now have to keep paying Russians to send astronauts on Russia's capsule. And this is also so exciting for SpaceX because it's a huge endeavor for them to be able to use their Crew Dragon capsule to take astronauts to the ISS. It's also just gives you kind of a glimpse of the appetite really from
I think I might do
this
kind of $2
space
limit
exploration and going and in the future investor appetite for human space flights.
Bro, once it broke through that
line, and SpaceX signed a $2.6 billion contract with NASA to complete 6 missions. At the same time, NASA also inked a similar deal with Boeing for $4.2 billion. So what is today's launch? Hopefully it does happen. I know the weather is a little iffy, but what does today's launch mean for the two companies in this space race?
Well, it's interesting because for Boeing, this obviously Boeing for sure because they had their Starliner,
I don't like Boeing no more,
didn't go into the correct orbit back in December, so it wasn't able to dock to the ISS. Boeing has to retest its Starliner before it can put humans on it. So SpaceX has reached first, and definitely watchers of all this also look at the fact that NASA paid Boeing about $2 billion more to essentially do the same thing as SpaceX, and SpaceX got here quicker. Of course, future endeavors are for it to go to the moon, to then go to Mars. But this also kind of gives you an idea of the marriage between government and the private space industry. So this is one of those big first steps. NASA contracted
you got it on the spirit,
companies to do this. And as we go forward into more space missions, into more explorations, you can expect to see this sort of marriage between the two. And also, it's worthy to note that during a downturn, too, governments spend on space exploration, so it can certainly help companies.
Inez, it's Heidi. Just a quick question. So from what I understand, there's a possibility that this mission could potentially not happen today. What is that contingent upon? And if it doesn't happen, is there another date that it could potentially
It's so funny, bro.
occur?
I put one of my homegirls onto it yesterday.
Some backup dates, May 30th, May 31st. The mission is supposed to happen at 4:33
Has not been seeing what's been going
on. Permitting. We've seen these kinds of missions in the past being postponed a lot of times. I mean, this is so much of this is weather contingent.
Boy, the medical company. Yep, see, that's why I remember I told you I'm out there 45.
So
45, like, listen,
not looking too
hitting this.
We'll see. We still have several hours to go.
I really still don't want to get in because
you can expect to see it on May 30th or May 31st at the end of May.
Which one are you talking about?
Inez, how is it
Moderna?
a big...
Oh, Moderna.
How is it Elon Musk distracted?
Yeah, Moderna made a run to the bottom. I ended up losing $4 on that trade.
That's not bad.
Speaking to some of the alumni from Penn, he had a double major at Penn, by the way.
I mean, you can't complain about that. You know what I'm talking about?
He also had physics as a major, along with whether it be economics or Wharton. But in any case, he has an extra chip on in
All right, go ahead, bro.
And this is part of, Elon Musk started this company 18 years ago. And it's a company that not only focuses on the Crew Dragon and doing these missions to the ISS, to the moon, and wanting to go to Mars, but it makes its money also on satellites. So it's been in the satellite business for a long time. There is also some talk about perhaps SpaceX wanting to spin off that satellite business in the future and go IPO with that. But certainly, I mean, this is his baby. Elon Musk he tweets about not just Tesla, but also space. It's what he loves.
All right, let's leave it there. Good chat, everyone. And a quick programming note.
What's up, Osama? What's up, man? Good morning.
Neil deGrasse Tyson on
How you doing, buddy?
30. I will be definitely
Osama,
in
what's up, man? Where you from, buddy?
A little bit.
Welcome to the chat.
Facebook both told their employees that they could work from
Welcome
home
to the chat, my friend.
Google CEO Sundar Pichai is not following suit. He announced that the company will be reopening its offices in early July for a small number of employees and will let more people back in September. Yahoo Finance tech editor Dan Howley is here. Dan, somewhat of an outlier here.
Yeah, this is really just kind of a way for Google to allow some employees back into the office. It's going to be very limited. It's going to be happening in July, and it's only employees that need to be there. You could still have the option to work from home, of course, according to Google, but it's something where they'll only have to be in the office about once a week, and then they would have to work from home again. And it's really just to kind of get those who need to be there, and those that don't need to be there to allow them to continue to work remotely. And then going forward, they don't expect to have people back into the office at 100% for some time, perhaps into next year, but they are expecting to have around 30% employees later in the year, 30% capacity for their buildings. And they also are saying that they are willing to work with employees to allow them to work more remotely. And that's something that we've seen across the tech space. Twitter saying people can work from home virtually forever. Facebook saying that eventually 50% of their workforce will be remote. So it really shows that these tech companies have taken this kind of situation with the coronavirus and the need to be remote and said, well, if we can do this, we can allow employees to be remote as well. And that should allow them to recruit from a broader amount of the population outside of those just on the coasts or in certain hotspots in the country for tech incubators. I think really it speaks to the fact that employees around the Bay Area will have a chance to find housing that may be a lot more affordable than just that's there.
Yeah, that could definitely be a byproduct. But what about those Google employees who want to work from home, indefinitely? Is the company going to allow them to do that? I imagine this is still sort of in the process, and perhaps Sundar Pichai doesn't know what he's going to do yet. But do you know if people are asking to be able to work from home indefinitely?
Yeah, there's definitely going to be some folks who are going to want to work from home, and they're going to look at that and see how much they can allow. They're also giving $1,000 stipend for employees who are working from home currently to purchase office equipment that they may need. Again, this is something that obviously for everybody just happened virtually, overnight, where we had to start working from home. And so a lot of people didn't have the necessary setups they had. They relied on the office. There have been some, jokes about whether or not the workers can use their corporate cards to get things like haircuts or the different various benefits that are available to them at their offices from home. But I don't think that that's something that Google is looking into.
Dan, won't Google have to completely overhaul how its offices are laid out? Here's a company that for years has pioneered giving away free food, other perks, and playing foosball in their offices, maybe even billiards. I'm not sure. But that whole community aspect has been central to creating the products that they have created.
No matter how you get them.
It's interesting because, they purposely made it more appealing to be in the office than home to ensure that workers were there all the time. And, you look at it and say, wow, we have a cafeteria that serves, 24 hours a day or gives us lunch, dinner, whatever. We have fitness equipment here. We have, on-site barbers, dental work, dry cleaning, anything you can imagine. But it was all just to keep people in the office. It wasn't out of the kindness of anyone's heart, really. And so you're starting to see that, well, maybe we don't need to offer all that. Maybe the best perk is to allow workers simply to work remotely and let them do things on their own time in their own home. So it'll be interesting to see how a company like Google responds to this, whether or not those perks start to get phased out, whether or not they keep them, whether or not they extend them to folks who are working remotely. That's going to be a really interesting kind of aspect of all of these changes for the tech space. And then naturally, that will trickle down to the rest of the economy as well, or the rest of the companies across the economy as well, as we've seen through the years.
Well, Dan, if Google's selling any of their gym equipment, I am a buyer. I can't find this stuff anywhere, man. Free weights, it's sold out all over the place.
Yeah, it's something that we've been running into too over here. So I think if they're going to give it away, I'm going to get in there as well.
All right, Dan Alley, thanks so much. Stick around. Much more on the markets on the first trade.
I needed to get that off my hands. I'll reposition on that one. I'll be fine. It's crazy. Took these profits. Time to run. It's time to run, baby.
Welcome back to the first trade. Small businesses are waiting to reopen on the heels of the pandemic, but not without taking a major hit. As part of our special Reset Your Mindset airing tonight at 5 p.m. Eastern, Verizon Business Group Executive Vice President and CEO Tammy Irwin sat down with Christina Stembel, Farm Girl Flowers CEO, to discuss the impact of the shutdown.
To have 12 and a half hours to shut down a company, basically, where 90% of your operation you have to shut down in such a short amount of time, the first feeling is just tremendous fear, like that's something that you've just spent 10 years of your life, 120 hours a week building, at no reason or rationale for what you've done. It's just an outside circumstance that nobody budgets, or puts in their financial model, a pandemic line, and so, we're bootstrapped. We're a high growth company. We were on track to do 50 million this year. We had 197 team members the morning of March 16th, and I had to furlough all but 6 that day in 12 hours with no notice. And then figure out how to move thousands of orders to another facility that didn't have the infrastructure to set up to do that, and how to communicate with our customers, thousands of customers, their orders were going to be late, and then to figure out if I was going to be able to stay afloat.
Our very own Julia LaRoche will be hosting the event, and I want to bring her in now. Julia, I am really excited to watch this later.
Yeah, Brian, well, I'm excited to bring a jam-packed hour with some great guests. Everyone from Mark Cuban, the owner of the Dallas Mavericks, the Shark Tank investor, to former Aetna CEO Mark Bertolini, Johnson & Johnson's Chief Human Resources Officer Peter Fasolo, and Verizon Media Group's very own Guru Gaurav, and also WW International CEO Mindy Grossman, the American Medical Association President Dr. Patrice Harris. A great line around a really important topic, mental wellness in the workplace. Look, we're going through this pandemic. You were just hearing the CEO of Farm Girl Flowers talk about the challenges. We have to talk about leadership in a time of crisis. How do we innovate? How can we move forward in the new normal? What does that even look like?
Julia, what do you hope people who tune in get from this? I mean, is there going to be some, actionable advice, I guess, that we can all use even while we're still working from home?
Yeah, well, Alexis, when you think about it, what I'm hearing these days from conversations with business leaders is mental wellness, mental health has become a huge issue. And if you look at our own company, Verizon Media Group, even before the pandemic, was promoting mindfulness and mental wellness within the workplace. And I know this is something that's really important to Verizon Media. They came out recently announcing, 10 million in donations for ad inventory around mental wellness, mental health, those sorts of issues. So I hope that we have a really important, uplifting conversation with our viewers, and that we'll welcome them back to continue this conversation, because I think this is one that's going to be here for a long time.
Yeah, no, you're right on, Julia. Well, good luck tonight. I'm looking forward to watching this one.
Thank you.
Be sure to tune in this evening at 5 p.m. Eastern for #Reset Your Mindset. We will bring together industry thought leaders, newsmakers, athletes, celebrities, and medical experts for an open conversation on topics of wellness, mental, emotional, and physical, and how it translates at home into the future of work. And just a reminder, it will be hosted by our very own Julia LaRoche. Switching gears slightly, sports would be a nice break for many of us, and luckily, the NHL is looking to finally drop the puck. It's proposing a new plan with a 24-team playoff, but is it good for sponsors and league fans? Yahoo Finance editor-at-large Dan Roberts joins us. Dan, good or bad here?
Well, I think it's smart, Brian. And of course, medically, none of us really knows what's going to happen in terms of safety and in terms of whether there's going to be another spike in cases in cities that have reopened. So, of course, that could throw a wrench in everything. But I will say, and I'm writing about this right now, that the NHL has now given the most detailed return plan of any league. And I think that if it goes well, it could become the model that all the other leagues follow. And I didn't think I'd be saying that. I mean, if you go back to March, it all started with the NBA suspending its season. The NBA was the first domino. And in the weeks that followed that, not just sports leagues, but tons of live events, concerts, whatever, followed the NBA's lead. And the NBA and Adam Silver got a lot of credit. Because of that, I kind of thought that it would be fitting if the first league to then resume would be the NBA, sort of the bookends. But it might be the NHL. Now, of course, the NBA is also trying to return. It's trying to bring all its teams to Orlando. MLB is trying to start its season. But the NHL's plan, which is very detailed, makes some sense. There's multiple phases, kind of like the way cities are doing it. In the first phase, which starts June 1, teams can start individual or small group training at their own team facilities. So players practicing. That hasn't been allowed previously. Phase 2, which wouldn't start until July 1 at the earliest, would be a full kind of training camp where all the teams would start training again. And finally, phase 3, and Gary Bettman has said it could be as soon as late July, although others think it wouldn't be that soon. It could be August, is playing this 2014 playoffs. So the top 12 teams in each conference from back when the league paused on March 11 in 2 hub cities. So they'll bring all the players, all the personnel to those 2 hub cities, and that would make it more safer. You're kind of quarantining and play the NHL playoffs over the course of a couple months, maybe, or maybe a month and a half, however long it takes. I'm sure it would be a sped up version. And the NHL isn't saying what cities those would be, but it did release kind of top candidates. I'm sure Vegas is going to be one of the 2. Chicago is also one that Commissioner Gary Bettman pointed to. But it makes a lot of sense if it works. And of course, there are a lot of asterisks.
So, Dan, I'd imagine no fans in the stands. That's my first part of the question. Okay, no fans in the stand. And also, what does this mean for advertisers, and what happens to their exposure? If they want to advertise on the NHL.
I think if you're an NHL advertiser, you'd rather it come back in some blunted, condensed form than not at all. And let's also talk about TV. A lot of the NHL games are on NBC, and the NBC has a vacuum right now, a space, because it was going to have the Olympics during this time. And obviously, the Olympics coming in July have now been pushed a full year. So if you're NBC, you would welcome this in NBC Sports. I think it's probably good for everyone involved in the NHL. Of course, the scenario you don't want, and I'm sure every league's thinking about this, and in some ways, I have a little bit of a suspicion, a theory that no league actually wants to be the very first to return, because then you're the duck, the duck in the water, you're the litmus test. But what you don't want to have happen is you take all the precautions, you have a detailed plan, you come back, and 2 weeks in, suddenly a bunch of players get it, and you shut down again. And then hindsight 2020, people say you shouldn't have come back. But considering all the different safety measures in place in all the cities that have now reopened, I mean, almost every big city except for like LA and New York City, I think this is smart, and I think this has a chance of working. And I'm sure the other leagues are watching this closely.
Hey, Dan, I'll give hockey a watch. I'm tired of watching these old school NBA dunk contests on ESPN. So let's watch some live hockey.
Totally. I'm a Preds guy. Go Nashville Predators, and they'll be in it. And then the Boston Bruins will be the #1 seed in the East. So I think if you're a hockey fan, this makes a lot of sense, even though, again, you're now starting the playoffs based on a much shorter regular season. I mean, normally right now, you'd have the Stanley Cup Finals going on. So the interesting thing will be there's a chance that you'll have the Stanley Cup Finals going on like in September, which is very late, but better to have it happen than not happen.
All right, Dan Roberts, thanks so much. Do stick around. We'll dive into the launch of HBO Max straight ahead on the First Trade.
Welcome back to the first trade. I want to get over to Inez Ferre, who is taking a look at the market action. Mixed market right now, Inez, and I see that the airlines and the cruise lines who have been hit so hard during this pandemic are actually in the spotlight today. What have you got?
That's right, Alexis. Well, the airlines have been rallying over the last few days. I want to show you some of them. You've got United that's up more than 1%. Yesterday, United was up about 16%. Delta also, but let me show you a 5-day chart because this is where you're really seeing most of the action over the last 5 trading sessions. And then if we just take a look at some of the cruise operators, same scenario there. They have seen an upside this over the last 5 sessions, 19% up over the last 5 days. Also today up more than 3%. Norwegian Cruise Line in the green today as well. I also want to mention that Boeing is up more than 1% as industrials today are leading gains. Also financials are leading gains as well. And then just mentioning Papa John's because that stock is up today, is in the green today after Papa John's gave some preliminary same-store sales for May, really benefiting from shelter-in-place measures and its no-contact delivery, with May comparable sales up 33.5% in North America and 7% internationally. CEO Rob Lynch saying that in May, for the second straight month, Papa John's delivered the best sales period in the company's history. Alexis, Brian?
Wow, people buying up the Papa John's while they're staying in. All right, Inez Ferre, thanks for that. There is a new player in the streaming wars. HBO Max officially launches today with content aimed at taking on the big dogs like Netflix and now Disney Plus. Here to talk about it is Nick Roos. He covers the streaming space at ARK Invest. Nick, glad you're here with us because this is starting to get a little confusing now. Let's break down HBO Max. I'm wondering how it stacks up against the competition, especially when you consider its price point, which is more expensive than the rivals at $15 a month. How does the platform stack up?
This is a great offering from HBO. If you look at from an HBO Now perspective and what HBO has been known for, it's been known for quality. And now it's trying to offer something that can compete with Netflix on a quantity scale. They're going to have 10,000 hours of content. They're going to have shows like Friends and The Big Bang Theory that are these water cooler shows that keep users coming back to the platform. So it does stack up well, a higher price point, but if you already had HBO Now or HBO, it's in that same realm. But the question is, will it bring in new users at that $15 price point?
And Nick, AT&T, they have put out a aggressive target on HBO Max, 50 million subscribers by 2025. Do you think they have any shot at hitting that?
I do. And the reason I think this is because, again, when we talk about the streaming wars, we typically like to talk about everyone going after Netflix, but we have to think of it in terms of these streaming platforms going after linear TV. And what we see with linear TV, especially now with the pandemic, is an acceleration of cord cutting. So right now there's about 86 million households. We think that's going to fall by almost 48% by 2025 to around 44 million households. And that's going to be a huge boon to these streaming services like HBO. So it is a possibility that HBO gets 50 million, but it is a high lofty price target. You have to remember Netflix is only at 68 million households in the US, and they've been doing this for 10 plus years.
Hey, Nick, AT&T said that it wants to unveil an ad-supported version of HBO Max. I mean, that sort of sounds sacrilege when you think about everything HBO has stood for since it first launched, right? No ads. Does that surprise you? Do you think that might turn off customers?
I think it's the smart move. I think if you're going after Netflix, you need to have a point where you can bring on new users, and the ad-supported tier is a very attractive offering, especially when you think about the quality content that HBO has. That's what they've been known for, whereas Netflix has been known for using other third-party content. But now you're kind of seeing this flippening happening where HBO is now going after quantity, Netflix is going after quality with its own original shows. But I do think that ad-supported tier is a very smart move by HBO and one that could really drive users to their services.
Nick, at $14.99 and let's assume 50 million subscribers by 2025, is the HBO Max platform, in your opinion, is it profitable?
we're not too focused on profitability at this point. Again, we have to be thinking about the long-term macro trend here, and that's getting away from linear TV. Users want a very simple solution, and that is streaming on demand. And these services like Disney, HBO, and Netflix are in a land grab state. So they will do what they need to do to grow their user bases to a point where then they will be able to be profitable. For HBO, that may be 50, that may be higher. But again, it all determines on how much content they're going to spend. Are they going to bring it? Are they going to reel that in at a certain point? So it's hard to say today, but we're not too concerned about it.
Nick, then how, just following up quickly, how do you measure success of HBO Max? If it's not profits, what's the success look like for this?
You know, it's hard to say today, right? What I think we need to focus on, again, is this idea that HBO is trying to go after Netflix. This is their move. Is it going to be successful if they do beat out Netflix? I don't think they'll ever get near the amount of subscribers that Netflix has on a global scale, but this is their play at that. If they're able to scale to that 50 million user base in the US, that's a substantial amount of people watching HBO's content. And that would definitely be success in my eyes, and especially theirs, because that's their target. But again, I think we have to understand that HBO is now trying to turn its service from something you signed on for your favorite show and then canceled, like a Westworld, into something that you keep year round, like a Netflix.
All right, let's leave it there. Nick Grusz, analyst at ARK Invest. Appreciate the insights and sign up for HBO Max. All right, do stick around. Much more ahead on the markets on the first trade. All right, welcome back to the first trade. Let's take a look at one of the companies we're watching on yahoofinance.com. Boeing is reportedly set to lay off 2,500 workers. Heidi Chung is back with the details. Heidi?
Hey, Brian. Yeah, so Boeing has been feeling the wrath of COVID-19 for some time now, but the company looks to be gearing up to take some action here. Boeing is reportedly expected to announce 2,500 voluntary layoffs in the U.S. this week as a result of the coronavirus-related demand hit that the airline industry has taken. Union officials at the Society of Professional Engineering Employees in Aerospace saying that Boeing informed them that they should expect layoff notices on Friday, and the first wave of layoffs are anticipated to be concentrated in Boeing's Seattle area commercial airplanes operation. This round of layoffs marks the first big round of